There we go. Hello, hello, hello. Hello, fellas. How are you? Hopefully, I'm sharing the right screen. Good to be back. Who all do we have? You guys able to hear me? Okay, screen is fine, voice is fine. Thank you. You read my mind. That I was just checking if everything looks good or not. So thank you for confirming. It's the Alexander, Alfred, James, John, Robert, Samuel, Sint. All right, maybe some folks might be joining in. So good to be back after I guess a break for a week, right? Hope you had something exciting to do last week when we did not have this meeting. Uh, did anyone have any issues in joining today? Because by this time I see a lot more folks already in. I'm just wondering, sometimes Meetup, does some funky stuff. Or the link just worked fine. Or maybe everyone is busy making money, right? You should be able to, let me make sure that all, you should be able to unmute yourself, right? Just let me know if you're not able to. Oh my God, this Zoom has moved all the controls. I'm still trying to figure out. Nope, it is good. It is good. All right, back to where we were. Easy peasy. Yes, what was easy? The market easy or what was?
Just joining Zoom. That's all.
Uh, okay, so let me see who else. Anyone joining here for the first time? Any first timer here? Maybe it's too early to get the roll call. We still don't have a lot of our regular folks just in yet. Robert says yes. So Robert, why don't you, while we wait for others to join, why don't you quickly introduce yourself? What kind of an investor you are, and what are you looking to get out of this meeting?
Hi, I'm retired 5 years. Uh, Worked with Freddie years ago,
Mhm.
Freddie. And so I'm here because of him. And he's been helping me and some others learn how to do IBS and verticals based on his project he's been working on for many, many, many years. So glad to be here to hear what's going on.
All right, welcome. Yeah, Freddie has been a long time here. Thank you, Freddie. Uh, Alexander says first timer there. So Alexander, why don't you go ahead next?
Sure. Good morning, good day, good evening, everyone, depending on what time zone you're in. I do personal investing
Mhm.
of my own funds. I'm interested in fundamentals, which is I go to the Church of Warren Buffett and Charlie Munger.
Yeah.
I find I find it hard to find people who are rooted in fundamentals and study deeply and understand the circle of competence and all that. So I've been doing it for quite a while. I'm always looking for like-minded people.
Cool. Hopefully you have come to the right church or temple or whatever. I just returned from Berkshire Hathaway annual shareholder meeting, so that's why we didn't meet last week because I was over there. Um, I'm also a disciple or student of investing principles from Warren Buffett. I won't call myself as a value investor because I don't want to box myself. In fact, this was a topic for discussion during my meeting with a lot of investors over there. Uh, for those who are first timers, I am also like Alexander. does, which is managing my own funds. I know Robert says that he is retired. My wife says that I'm retired because I don't have any other work, no other job except just focusing on investing. But my gosh, I think I work more hours now than when I used to work when I actually had a job. So I don't call myself retired, but just like Warren says, right, tap dancing to work. I enjoy my work of investing, analyzing companies, getting deep into fundamentals, reviewing earnings, etc., etc. So, so that's my situation. This is my third year of just surviving on investing. I'd say since his first timer here too, why don't I think we have time for one more introduction. So why don't you go ahead?
Hi there, Sin here. I actually have most of my funds being managed by Charles Fisher, but I do have a little small war chest that I want to start managing. It's just kind of sitting on the sidelines, just earning interest right now. So I wanted to just kind of learn more on what to invest. I do understand fundamentals because I work in the finance field for a publicly traded company, but it'd be kind of surprised, even though I had inside information of my own company, it did worse than I thought I would do on certain times. So, not an expert at all, but, do understand some of the fundamentals. Just wanted to learn more.
Cool. Welcome. What part of the world are you joining from? Alexander, Robert, Sin?
Los Angeles for me.
All right. SoCal. How about you, Alexander?
Vancouver, British Columbia, Canada.
Oh, okay. Oh, we have some Canadian friends. I know in our group there are a few other folks who joined from Canada. And Robert, I guess you're from Bay Area?
I used to be. When I
Oh.
retired, I left like others have. And I'm in the gambling capital, Las Vegas.
Vegas. All right. So you can scratch your gambling itch in Vegas and not use stock market as a gambling one. You have a better outlet for your scratching your itch because you're in Vegas. All right. Okay, I think we have enough crowd. So let's anyone else here joining for the first time before we get started? Nope. All righty. Yeah, rest a lot of names I see are all our regular ones. So what I have for today on my agenda, definitely want to give you a quick rundown on my a few days that I spent. So Kevin says new but no audio. Not an issue. Yeah, if you just want to, Kevin, if you just want to, put in a chat in terms of where you're joining from and what kind of a investor / trader you are, it will help the rest of the folks also in discussions, because we have all type of traders / investors here. Some are long timers, some are also trade in zero DTEs. Everything under the sun is okay. Whatever works for you. All right. So welcome everyone to our discussion number 321 on every Saturday. So it's almost, I guess it's maybe a little more than 6 years of talking about investing as a DIY investor, as a retail investor. My background is not in finance or in financial services industry, so I'm kind of an outsider. I learned myself, taught myself how to read enough of a earnings report or enough of a balance sheets or P&L or cash flow, just from to make get an idea around, hey, should I move ahead with this company or not? Not that I've figured everything out. Every day is a learning day, but far away from being an accountant or doing forensic accounting. I don't think I'll ever be able to do it, but I enjoy the process of investing. And I think I've been doing it along with the job for more than, I think, almost 13, 14 years. 3 years ago, I decided I think I can pay my bills. It was not an easy decision, but I really, really wanted to do it before my brain cells stopped working. I just wanted to get 100% into investing. So this is what I'm focused on now. So today, I want to give you a quick rundown from my discussions during the Omaha Berkshire Hathaway shareholder meeting. As you guys know, I was attending this over the past weekend. That's why we did not have the meeting. And also, this is earnings season now. In a lot of companies, I've been reporting earnings. I will review a few. I was actually late in catching up on earnings because I've been working on something other, a lot of cool, exciting stuff. I will give you a peek into that today. I think it's at a place where I'm okay to share some of the stuff with you guys. And so that's why I was heads down and neck deep working on some of the other stuff. But good to be back on track in terms of reviewing earnings. So I started posting some of my earnings review on Twitter. No, it's called X now. Yesterday, so we'll go through that. And yeah, we'll look at what's happened on the macro side, company specific news. I think some 15-20 company one-liner. And then we'll open it for our breakout rooms, talk to other investors. I don't know everything. No one would be able to know it. There are some areas where I don't venture, like zero DTEs, but if you may be interested, there are other people. Go and talk to them in the breakout rooms. If you're a futures guy, I don't trade futures. If Sri is here, he's a big on futures. He can help you a lot more in terms of that. Okay, so that's the overall agenda. Have a questions, put in the chat or raise your hand. I'll invite you to speak up and we'll take it up from there. Cool. All right, with that, let's dive right into today's meeting. Anything and everything that we discuss here is only for education, right? So don't go and trade. Hey, I heard Vivek talking about this, so let me put my half of my net worth into that, right? Never do that. All right, so first, let's start with the reflections from Omaha. And there are a few things that we did over there. Of course, the bigger portion, the main meeting is where the annual shareholder meeting is. But that's not the biggest attraction for me, right? But the biggest attraction for me in Omaha is actually going and attending other conferences or meeting other investors or talking to other people, right? Just to do a quick pulse check on, hey, am I crazy that I left my job and focusing 100% on investing, right? Hey, am I on right path? Bounce off some ideas, see what other people are doing, what the other investors are feeling. And of course, it's a time to, meet and talk to some of the investors that you've always admired from far away, right? So I got to meet, I want to show some of my fanboy moments. Of course, I got to meet and talk to Monish Pabrai. I took a picture with him. Then this one is Chris Bloomstrand. If you guys have been, reading Berkshire reports, you would probably know Chris Bloomstrand. He does the best job of dissecting Berkshire Hathaway's business. I don't think anyone else knows the details of Berkshire Hathaway as much as Chris knows. Chris is again very famous valued investor, runs fund called Semper Augustus. And the last one on the right is I actually did not even know his name, right? I think in one of the YouTube podcast, he was there as a guest. And only thing that stuck in my mind was he runs a Twitter handle called Compounding Quality or Quality Compounding, something like that. And I've learned a lot from his Twitter feeds, right? So when I saw him, I said, are you the same person who runs this? He said, yeah. I said, come on, I really want to thank you in person for teaching me a lot of stuff on Twitter. So I got to take a picture with him. Pretty young guy. I think he's like early 30s or maybe late 20s, 30, 31 years old, from Belgium. Sorry, I didn't have my dose of coffee in the morning, but pretty good. Has a kind of the same investing philosophy that I adhere to, which is finding great businesses and just hold them forever, right? There is no need to, if the business is doing great, then no need to switch in and out of those businesses. Just hold them forever, right? Whichever way is make you comfortable in holding it, just stay with that. So yeah, I got to take some pictures, and I think another big moment was in front of Warren Buffett home. Last year was my first time I went there to Berkshire Hathaway. I could not go and take this picture, but this time I had some more time because I went on. I think I went on Thursday because I was told that there are a lot of meetings that happen before the Saturday big meeting. But so I went there a couple of days early and had some time to go and take my pictures. Pretty modest home, I would say, if given his wealth. But I think this is the house that he bought for what, $30,000 in 1950s and has been staying in the same place. One thing which surprised me was how quiet the place is, actually the whole residential place. And there were hardly any people on the street. So I parked my car. Of course, I didn't park it right out front of his house because, hey, I wanted to get some steps for my walk also. So I parked my car and then walked, and I hardly see people. Maybe I saw, like, I can count on my fingers. Maybe I saw 5 or 7 people. Some were dog walking, and maybe I saw one another person like me who came to take a picture of Warren Buffett house, right? So yeah, but I'm like, hey, why not? So that was again my bucket list checked out. Sridhar, Peter Seegers owns, yes. So that's the gentleman on the extreme right. He's Peter Seegers. And I actually met him outside. I'll tell you once I talk about what other conferences I did. In case any one of you are planning to go next week, I'll share you some tips and tricks of how to get into conferences. Number one, I didn't pay for any of these conferences or the meetings, right? I am a cheap guy. I don't want to pay to attend these meetings. So apart from the bigger conference, let me first give you a little bit on the bigger one, shareholder meeting. The crowd this year was perceptibly, less than what was like last year. Of course, one reason is that Warren Buffett was not on stage. And when people come to Omaha to listen to Warren Buffett, it's more about the questions to him on general life and investing, and very few questions around the Berkshire Hathaway business itself, right? So with Greg Abel now running the show, and of course we had Ajay Jain, the vice chairman, on the stage, I don't know how many people would be comfortable or, will be asked to ask him the general life level questions, right? Yes, Greg will know ins and outs of Berkshire Hathaway as a company or as a business, but that's just one portion, right? Most of the crowd, the questions that most of the people always had was on a general investing philosophy, dealing with emotions, life, what do you think in the macro and all that stuff. So I guess if I were to take a guess, maybe we had a 60% crowd as compared to last year. The other reason could be with the increase in fuel prices and in what US has, I mean, the status of US in the rest of the world has changed. So not many people would be willing to travel to US. The tickets have become expensive, and then we also pissed off a lot of people in a lot of portions of the world. So some of our Canadian friends might be saying, you know what, I don't want to go to US, So that could be another reason why we had a thinner crowd than the usual. When I say thinner, maybe we had only 30,000 people instead of 50,000 people, right? But still, that's a big number in itself. One good thing about this meeting was this time we actually got to get more details onto to know about the Berkshire as a business, right? Greg went very detailed into how they're performing as a business. Other thing was that we also got to hear from other business leaders. So he had the chairwoman from BNSF. Sorry, I forgot the names. She was brought onto stage, and then we also has a chairman. Sorry, the CEO of. No, she was not a chairwoman. She was a CEO of BNSF, and then the CEO of NetJets. And we got to ask, questions. They were on the stage responding to it. So we got little more information about Berkshire as a business, which kind of have been lacking over the past many years. But we had less fun. We did not have the one-liners from Charlie, which I sorely miss. And Warren would rather have little more humor in his meetings. Greg was like all business. so so I don't think he has yet figured out. I mean, obviously it's very difficult, almost impossible to fill shoes of Warren Buffett, but he was like all business talks. So that was I would say the main meeting. Of course, then I got to go to the exhibition hall and talk to some of the Berkshire Hathaway managers. I spent some time with the Berkshire Hathaway Energy folks talking about the energy scene in US and how a lot of these hyperscalers are complaining about the lack of energy. I got to see hear a different viewpoint from Berkshire Hathaway Energy executives. So anyway, that was fun. And yeah, and I did a little bit of a shopping, whatever you do over there. So that was on Saturday. Before that, I think I attended so what are some of the other things that I did? I attended an AI workshop by Palo House. So it was, let me go, I think the chronological order. Apart from the main conference, this one, I think I attended Value Investor Conference by Gabelli Funds. This was on Friday, if I remember correctly. Basically, this is the Gabelli Funds. I don't own any Gabelli Funds, but this is open. So you could just go and, send an email saying, hey, you want to attend it? That's what I did. And they confirmed my registration. So I just showed up there, gave them my name, got my tag, and attended it. So, again, I think, so they also brought in some good investors onto the stage to talk about various topics. Chris Broomstrand was one of them. And after this meeting, we got to bounce off some ideas and discuss some stuff with Chris Broomstrand on AI and the capex that's been going around, in this AI, et cetera, et cetera. Again, the main attraction for me, for all these meetings and the workshop that I attended, was to get to talk to other investors, right? So I was able to meet some of the familiar faces, the people that I met in 2025. And then I also, made some new friends for this year. So hopefully maybe able to, be able to meet them for the next year as well. Sometimes you find someone who is of a different opinion, challenge your thinking. That's great. And sometimes you find someone who's like, my God, that looks to be my investing soulmate. Like I met another person and we hit it right out of the park. We had such a great discussion coming from a similar, I would say, investing philosophy and background. He worked for many years. He was from, much smarter than me. IIT. I mean, IIT is equivalent of Ivy League, MIT Tech colleges in India. And then Warden, MBA from Warden, been working in one of our top strategy consulting firms for many years and now focused 100% on investing. So we bounced off a lot of ideas. Coincidentally, his name is also Vivek. So, but that's not why we, hit it. We hit together. But it was more in terms of our ideas were completely gelling in terms of how we look at an investment or how we look at a company, right? And I don't look at the charts when I'm analyzing a company, say opinion. So yeah, you get to meet a lot of people out there. I meet a lot of fund managers, some analysts, etc. Then second one was the AI workshop by Palo House. It was advertised at AI workshop for investors. So I thought since the name says workshop, there should be something hands-on. in terms of they might tell us how to use various these new AI tools to become better in terms of from an analysis perspective, right? From that perspective, it was a complete flop. The objective of this workshop was, it wasn't even a workshop. There was nothing hands-on. It was a presentation by a hacker house in Palo Alto, and maybe one slide talked about you should be able to use Claude, and only 5 minutes of that. So otherwise, not much useful for me. They were mostly looking to see if someone can also fund the next cohort of engineers that they have. So basically, the hacker house is, if you are an engineer building some cool AI application, you go and live there, stay there, eat there, sleep there, and then they get sponsorships they have something from some money from A16Z. Now they change the house because the landlord, whatever, they say, hey, landlord wants the house back and they're looking for a new place, new sponsors and all that stuff. But good thing out of that is I got to meet again some cool new folks for new friendships, right? Then the next day after I think this is after the main event. I attended the ValueX BRK, which is again hosted by Guy Spear, but a lot of these great investors will be there, Monish Pabrai, etc. So again, this is a lot more discussions around what's happening in the world, and then you can actually ask questions to those speakers. After that, I think this is on Monday or Sunday. I think this is on Sunday. I attended Intellectual Investor Conference by Vitaly Katsenson. I had no idea who that person is. I was just looking for some free events that I can go and attend. This name showed up when I was doing my search, so I signed up. Right? Wow, I was surprised to see that this person is actually very famous. He was able to fill the hall, the same hall where we had a ValueX BRK. The hall was full. And I was really surprised. I'm like, how come I never heard about this person before? Then the other person, the other Vivek was sitting with me. He told me, yeah, he's written some books and has a podcast and all that. What surprised me most was the number of attendees who lined up to ask questions of Vitaly was a lot more than the number of attendees who lined up to ask questions from Monish Pabrai, right? I guess it is something to say that probably people see that, hey, the gentleman Vitaly, someday they can be Vitaly, right? You could see a path that you could become Vitaly if you follow the footsteps. Again, I'm not saying that you should follow it. I don't know. I've never followed him. I only got to know him like on that day. Not to him as a person, not personally, but who that person is. But I was really surprised that there's a lot of people who attended that talk. Anyway, I missed one more stuff. There was one KPH, I think. This. Then I also attended, after this meeting, I attended a stock pitch event hosted by Idea House. Again, I had no idea what that was. I was looking for a way to spend, my afternoon to attend an event, and I found that there was this event happening. It was like from 1 p.m. to all the way to 6:30 p.m. And I said, great, it'll keep my afternoon busy. Only hiccup was, to attend it, you have to pay $300. I'm like, I ain't doing that. $300, I'm not doing it. Or you have to pitch a stock. I'm like, sure, I'll pitch a stock. Obviously, I had no presentation, no PPT, no deck, but I can talk about a stock. So I volunteered that I'm gonna pitch a stock, and got myself a free entry into this, right? And I went and I'll go through some of the stocks that some of the other investors have pitched there. But I paced Mercado Libre. And we're going to review the earnings of Mercado Libre today. But it was a fun event. It was, I would say, a little heavy. No break. One after another, folks will come in and pitch it. Some were like completely, it's like, hey, some micro cap or mini cap, etc., etc. But you figure out what you like or not. But it was good for idea generation, right? And then you can decide if you want to, how you want to play with it. But it was good for idea generation. Other than that, I also attended one meeting by Kelly Partners and Holdings. I don't even know when this was. I think this is missed out on a chronological order. But again, I was with another gentleman, and we were both looking for, hey, there's another KPS meetings happening. But then when we went there, I realized that you actually had to register for it, right? And then get approved because they had the name tags and all that stuff. And then we realized that, hey, the hall is like half empty. Then we asked the organizer, hey, we just showed up here. Can we join? Sure, come on in. So one thing I realized in any of these conferences, just show up. Just show up. And they'll probably let you in. Right? And most of these like Idea House or KPH or Velix BRK, right? Only thing that I signed up earlier before I left San Jose was a Value Investor Conference and the Intellectual Investor Conference. All other were like ad hoc decisions. Like Idea House, I like basically kind of registered late in the evening and the event was the next day. I'm like, yeah, I'll just go there. Right? And I'm sure if you just show up a request, then they'll probably let you in. So one thing I learned, just show up. Right? There is no shame in going say, hey, I'm here. And if it's okay with you, I may want to attend this meeting. And I'm sure there are many other meetings that happened. I just didn't have time. But if you just show up, they'll probably let you in. The other two I knew were happening, but I could not attend was TIP's The Investor Podcast. They have one meeting which is open for public. Another one is only for their mastermind community. I wanted to go to that open for public meeting, but I think it clashed with some of the other ones, so I did not go. Another one which I missed was Mental Models by Monish Pabrai. Someone told me it had happened at some other place. I did not even know about it. So for next year, I'll see what other talk Monish Pabrai is doing, and if it's not clashing with anything else, I'll go there. So that's what I did during the Friday, Saturday, Sunday, and Monday. 4 days in Omaha. Monday actually was no meeting. I think the Saturday was last one. Monday I just flew back, but morning I was working and then I flew back. So yeah, 3 days, Friday, Saturday, Sunday. Vishal says, how did you just go to attend a conference? Oh no, I mean, you can just own one share of Berkshire Hathaway B class share, which is like $480, and you can go and attend it. So this time, for whatever reason, I did not get my badge in time in the post, right? So generally, I got a proxy form. I filled it up. I said, I want, 3 badges. I thought maybe if someone needs it, I can give it to them. None of them arrived. So on a Friday, they basically open a will call center where you can go to the booth and show them that you are an owner of a Berkshire Hathaway share. Even one share, that's enough. You're a shareholder, and they'll give you the badge. So basically, I went to the will call center. I opened up my retirement brokerage statement and showed them I own BRKB and got my pass.
Oh, cool to know. Thank you so much, Vivek. That's helpful.
That's all you need. You need to have at least one share. And if you're not, even if you don't have shares, every shareholder can ask for 4 passes. So I got 2. And when I went out, there was one person who was like alone, standing, back in the queue. I said, are you attending single? I said, yeah. I said, don't have to stand in the queue. Here, take the pass.
I see. So do you need a BRBK A or B?
Hey, if you have very few people can afford A. One A share is like $800,000. B is all I can afford. So
Okay.
BRK B class share is what, $480 or $475.
Right.
Yeah, you can buy one share and show that as a proof that you are a shareholder. You can get to attend this event.
Got it. But we should be able to go to any conferences like that, then, right? Like owning the share. So
Yeah, I
BRB
don't know.
is one of them.
I don't know how many other companies actually conduct like shareholder meetings like these two, right? So, and
Right. So I was thinking the Blackstone. So but you know what's happening, right? So
yeah,
Entropy, Blackstone, Goldman Sachs, and few companies. So they are all getting pumping money into Entropy, and they'll be owning, I think, 37% of Entropy before it goes to public.
yeah.
That's
So
that's the recent scoop.
yeah, no, as long as they're shareholder, we have the equal rights. Doesn't matter whether, I mean, you can't affect any change, but you should be able to attend any events that are open for shareholders. So yeah, this was my second one. So let's look at some of the stock pitches that folks had done. I just created a watch list. So let me know if you're interested in any one specific one. Somebody talked about ExxonMobil. We know about it. I met some ML engineer from Vista Energy, but he did not pitch the Vista Energy stock. There was someone else. Fairfax Financial Holdings is similar. You can call it as a Berkshire Hathaway of Canada. It's on the same business. They have an insurance business, and then it's run by Prem Vatsa. Again, famous among the value investing community. And someone pitched the Fairfax. I have no idea what the HEP group, right? Reonier, Restoration Hardware, Rubric, QXO. Has anyone invested in QXO? I actually got interested in QXO just from the fact that who the CEO is, who the person in the hot seat is. I never looked into this company. I never analyzed it. But when I heard about this name, I thought, okay, this is something I might be interested in look at. Anyone owns QXO? So the reason I got little bit interested in this is the CEO of QXO have had a history of successful IPOs, and all he does is he'll basically enter into one business which is a lot more fragmented, and then start buying the other companies, the smaller players, make a big conglomerate, go IPO, and basically increase the value for the shareholders, then move on to the new business. So United Rentals, he had done the same thing. Let me look for a CEO of QXO. Brad Jacobs, right? What are the other companies? Yeah, he was a chairman role at XPO, GXO Logistics. Prior to that, he has founded 5 multi-billion-dollar companies: United Rental, United Way System, XPO, GXO, RXO, and now it is QXO. So it's like a playbook that is done multiple times, rinse and repeat, which was interesting. Right? What else excited me? Not on progressive OTC markets. Anyone own OTCM? This is basically a company which is behind, a lot of these shares that trade in OTC markets, right? So if you and I want to trade some shares, we have a bigger exchanges like NYSE, NASDAQ, Amex, and there are 16 or 17 exchanges. There are a lot of smaller exchanges as well. But there are some shares that do not meet the listing requirement for these exchanges, but you could still trade it. Those are called, when you say the share has been delisted, it has been delisted from these big exchanges, but they still trade in over-the-counter market or in a physical paper terms. When the share used to be, they used to transfer paper. It's called pink sheets. The OTC market is much bigger, has much bigger volume than a lot of these established exchanges. And very recently, there were two podcasts. I think one, the TIP, they covered this. I think their Intrinsic Value podcast covered it. And there was another podcast that talked about OTC markets as a company. So I thought, okay, now I'm also hearing this in this Idea House Stock Pitch event. I'll put it onto my watch list. Nextgel, not interested. It was more of a biotech firm. I don't know if you guys are interested in any one of these. Do let me know. Kimberly Clark, more of a value player. Mercado Libre, this is something which I talked about. Joby Aviation. Joby Aviation. There's. I've seen these folks YouTube videos. Now I can't recall the name. It start with S. Some report. So that guy was there and he talked about Joby Aviation. Some people talked about IoT, which is Samsara, Ingredient. I have no idea what this company is. Figma. I don't know why would you own Figma. HIFS. This is a regional bank. FICO. We know what's happening with FICO. Probably considered as a value player. I don't know if it's like a falling knife or it's a value player right now. You can decide. Same is the case with Duolingo, CRTO, Criteo, Bloom Energy, AXTI, AMREP, Grange Resources Limited, then Amalgamated Financials, Arthur Daniel Midlands, and Arch Capital Group. So these were the, and I think there are a few more, but I could not find it in stock analysis. So it's not in the watch list. But these are some of the companies that people talked about in the stock pitching event. I thought when the folks were coming and pitching about, I'm like, dude, I'm the only one who's pitching like $90 billion company in here, because most of them were talking about mid cap to small cap, but then Progressive came and basically took the first slot. So Progressive is bigger than Mercado Libre. Any questions? What else I did on Berkshire Hathaway on this trip? I guess that's it. Yeah, that was the last one I wanted to talk about. Which sources do you find useful when analyzing company? SEC, Edgar, Value Line, etc. So I go through. So I used to go through. Start with the annual report and then go to the quarterly reports, and then I realized I'm spending like 5 hours to go through it just to realize, oh, that company is not even good enough. It's not good enough to even deserve my attention, right? So over the last few years, I built my own framework, and maybe I can show you if later on we have a time, maybe during the breakout rooms, which will tell me in some of the metrics that I track, which will tell me in 5 minutes if this company deserves further attention or not. It's not a pass for me, but if something I find that everything is red in my metric or my model, then I'll say, okay, I don't want to even spend any minute on this particular company, right? If the main stuff comes out to be green, then yes, then I will look deeper into it, then go and look at their earnings, go and look deeper into their financials and all other stuff. In terms of reports, yes, I will. I read Value Line, Morningstar, and maybe some of the other analyst reports. But at the end of the day, I want to make my own decision. I just don't go and if the analyst says it's a buy recommendation, I just ignore it. My idea is, guys, you just tell me the business. I have to make a decision if it is buy, sell, etc. So that's how I look at the companies. Morley, maybe we can host talk pitch once a month. Yeah, we can do something in person. Like I said, I was just holding back. I have a lot of ideas to do it, but I was just holding back, not putting anything else on my calendar until my kids goes out to college, which this year she will, and then I'll have a lot more time and I have a few more ideas that I want to do. One of them could be having more in-person meeting, stock pitching, and then some other stuff also. So hold on to it, Murli. I just wanted to make sure I don't, spread myself too thin in terms of managing my other commitments and investing, and then spreading myself too far and wide and not being able to do the best job at it. All right, any other questions on updates from Omaha? Rajesh has been holding Joby for 2 years. I don't think I would hold Joby. because if I run through my framework, it doesn't look to be good. So I'm not going to hold Joby, but then, hey, there is always a place for every type of stock in your portfolio, depending on what kind of investor you are and for the right position sizing, right? If I were to own Joby, I'll just have to make sure that the position sizing is correct, right? And it may be different. When I say correct, it could be different for different investors. What's the meeting next week you referred to? Me refer to any meeting next week? Maybe no, I don't think I referred to any other meeting next week. Or maybe it was a slip of a tongue. The only meeting that I'm hosting next week is the same, our weekend meeting. There's no other meeting. In future, I do want to have, some more stuff. Okay, so let me bring up Joby. And this is the framework that I look at it. Like, I just can't invest in Joby, man. Like,
Yeah, Joby is like a little
it's a
moonshot.
moonshot, right? It's a
play,
moonshot.
yeah.
You want to invest in, it's just like a VC kind of investing. All negatives, 1 year, 3 year, 5 year, 10 year. I see a lot more reds out here. For me, Joby is like a moonshot stuff. I don't want to spend going through the earnings report of Joby. Right. So Alexander, you asked me how do you look at it? This is how I just pulled in the data for Joby. In 2 minutes, I could say, not for me. Or this is the moonshot play, not really a serious money that I would want to put behind Joby. Right.
Yeah, I'm
I
very
want to-
curious about your core like numbers you're looking at, probably statistics. Is it ROIC, ROEs?
not
Yeah.
just one. I basically look at all of these. In some cases, you might sacrifice one for the sake of others, right? So I don't think there is only one single metric that will make a difference for me. But if you are giving me great growth, but at a cost of a margin, maybe that's okay, right?
Just
But I'm not
consider-
getting growth, not getting margin, and you're diluting me. That's probably no for me. Right. Or in some cases, hey, the story makes a lot of sense. In this case, I might still give you a pass. But I wanted something that will tell me very quickly without me having to pour through the financials, something to make a decision on, hey, should I move ahead with this company or not? Joby, for me, this is my Vegas play. If I have money to play in Vegas, that's all I invest in Joby. Not that Joby is right or wrong. Hey, just kind of how I will position size Joby. Ehang is again a competitor for XPeng when it comes to the eVTOL. So these are all the players in the same space, right? Joby Aviation, Ehang, and then XPeng or XPeng Motors. Ehang and XPeng are from China company. Right now, these all will be a moonshot players. I own XPeng, but I know that it's a bet on their eVTOLs, and of course they are big on EV side also, right? Ehang, I think they are the farthest along in terms of their eVTOL business, right? So if I were to invest in eVTOL, I might put Ehang. But again, from the numbers perspective, right? Because these are all moonshot players, the numbers may not look that great. So you need to, right, at this point of time, you may just have to bet on the story behind it or the narrative behind it. So if you know about Ehang and what's the narrative behind it, yeah, bet on that. So again, the same similar stuff on Ehang as well. So all these new companies or like Neos or XPengs that start to pick up, the numbers won't look great. It's more about the story. That's where you'll have to depend on, see if the story makes sense to you or not. Yeah. Cool. Anything else before we move on? Alrighty. So let's look at overall market side. What happened this week? 3 major things to notice. Number one is labor market is improving. First of all, market hit new all-time high. Right? We have so many issues going all around the world, and still we keep on hitting all-time high. This shows the market resilience. This is why I'm of opinion, just don't sell and get out of the market. We never know what will happen next month or a year later, right? Just stay invested, have a long-term view, and if you don't need the money for next 3 years, put it to work, put it to work. Otherwise, we'll work until we die. We have to work until we go to the grave. That's what got me investing. I was super scared of the fact that if money is not working for you while you are sleeping, then you will be working for money till the time you go to the grave. And I'm like, I don't want to do that. I want money to work for me. Anyway, coming back to the labor market, the numbers, the payroll numbers, they were better than we expected. Average gain in private employment, we had almost 90,000 per month so far this year, and unemployment rate hasn't gone up. So, right, again, and I understand there's a way in which unemployment rate is calculated. So if you're not even looking for a job, even though you don't have a job, but you're not even looking for a job because you became like so frustrated around, come on guys, I applied for 100 companies and didn't even get a one call, I'm done with it, right? And then suddenly you fall out of as a count from unemployment, right? It doesn't mean that you've been gainfully employed. Even if you're underemployed, you fall out of that unemployment bucket. So there is some quirk to how the unemployment numbers are calculated, but if you compare it with the previous period, it's the same stuff. So comparison was, I think we're still okay. But we did see some encouraging signs of hiring pickup. Again, I think the most of the hiring was in healthcare and in services industry. If you really look into the tech industry, which is where I come from, or in the Bay Area, the picture is not good, right? So again, we continue to see companies announcing layoff, especially the companies on the tech sector, because they become way, way, way more efficient, or at least they're sending signal to investors that they're becoming way more efficient and can do the work with fewer employees, but employ a lot of these AI tools to do the coding, right? That's the best use case of AI tool that we have right now, is do the work of software developers, right? That itself is almost $1 trillion industry, right? It's not a small industry. Software developers don't come cheap, right? And now if you need fewer of them, it's a lot of I would say a runway to capture. And that is why, I mean, look at the Anthropic numbers. This is like I think Dario Amodei, the CEO of Anthropic, was in one of the meetings where he told that the revenue as compared to last year it's like 80 times, not 80%, not 8 times. It's 80 times. It's been a crazy growth that Anthropic has seen in terms of uptake of its coding software, basically Claude and essentially Claude. And the other LLM providers have taken notice now. And that's the reason why we saw OpenAI, saying, hey, we got to get back to the core and ignore some of these stuff like video generation, like Sora, etc. They're deprioritizing all other stuff, which is more around consumer oriented, right? Image generation and video generation, and focusing more on the stuff that enterprises would need, which is helping them code, basically write a better code and do more with fewer software employees. That's the best use case that I have seen. We have yet to see how the other traditional industries benefit, but right now, all the benefits that we are seeing for the companies, right, not for the employees, but for the companies, is replace the software engineers with an army of AI agents and sub-agents. Some of you build those things, so right? I don't have to tell you. You know how productive this could be. You don't need an army of now 10 agents, or no 10 software developers to run a startup, right? 2, and then an army of AI agents. So that reminds me, I was having a discussion with similar with some of our other investors, and we were talking about the impact of AI and what's happening in these companies. And I was reminded of a joke that I read somewhere. I'm like, 3 great friends, 1 product manager, 1 software developer, and 1 UX designer. After work, they go out for a drinks, having beer in a restaurant, sitting across the table on the round table, chatting with each other, having fun. But every one of them, each one of them is thinking in the back of their mind, why the heck I need you too? And that is a reality now. Product manager is thinking, why do I need a UX guy and a software developer? I know what I want in my product. I can ask Claude Code to do it. The software guys is thinking the same stuff. Guys, these models are great in terms they know, and they know what competitors have, what we don't have, what features to build in a product. What do you need a product manager for? The same is the case with the UX guy. And we are actually in the same situation. You don't need these 3 people. 1 person can do these things. Again, I'm maybe a little bit of an exaggeration, right? You can't just put that code in production. It might bob off, who knows? But you get the you get the direction in which the wind is blowing. 4 years later, I think 4 years is too far. Maybe a year later, you might be able to get a production grade code. And when I say production grade, which is to support, let's say, millions of users. If you're not only looking for doing something for your small business, and might as well you can do it yourself. And that's a SASO calypse that we are seeing in the market right now. So anyway, but there was overall, from a job market perspective, hiring picked up. In the technology industry, the situation is completely different. We saw a lot of, I think Bill.com announced some 30% layoff. Coinbase announced 15% or 40%. Again, Coinbase announced layoffs. Bill.com announced layoffs. Few other tech companies again announced layoffs this week. So every week there is a layoff announcements coming from tech companies. So if you are working in a tech company, find out how to be relevant. And if you're not using one of these tools, it's like refusing to use calculators or refusing to use computer in 1990s. Ain't gonna work. You gotta figure out how to use these tools. Yeah, Sam, go ahead. You had a question. Sorry, I saw your hand up. Anyway, Sunny said, what do you think about Intel? So yeah, we will hold your question. We'll come back to Intel later. What else in the market? Earnings seems to be growing great. Right? This is where I think market is forward looking at the earnings and not what's happening, especially on, hey, this is happening in Iran, this is the administration, blah, blah, blah. Earnings continue to be strong. 2 weeks ago in our previous meeting, we talked about that the tech companies, we are projecting, the analyst projections are around 45% earnings growth year over year. 45%, right? That's amazing. Overall, on our, for Q1, like it's still looking at Magnificent 7, looking at what, 25% growth. The rest of the market is also fine. So far in S&P, 89, almost 90% of the S&P 500 companies have reported earnings. Right? One of that 10% is the biggest company, which is NVIDIA. I don't know why NVIDIA reports is so late, but it is what it is. So we can't just right now sit back and say, okay, earnings season is over. It's not over until NVIDIA is over. But out of those 89% companies that are reported, 84% had better than expected earnings per share. Now you could You could very well come and say, "Oh my God, the estimates were depressed," but I don't think analysts have brought down their estimates after the Iran war started. So that may not be the reason. Just that, well, they're done better than what the market was expecting. The blended earnings growth rate for the index is tracking nearly 28% in Q1. 28%. And we want to be bearish when the earnings are so high. I'm not saying the market is available cheap, but 28% growth in earnings is like, you don't see that often, right? This would have been the strongest, if you get 28%, it will be the strongest delivered since 2021, last 5 years. 10 of the 11 sectors are reporting positive year-over-year earnings growth. And let's not even talk about the semiconductor. Now we can talk about Intel. The tech index, largely driven by the semiconductor. Maybe it's the time for a chart now. Let's go to SMH or SOXX, right? I'm not even looking at individual companies. If you look at individual companies like SanDisk and Western Digital and Intel, things are even crazier. Right? So this is an ETF of semiconductor, right? And what we are looking at is, wow, like end of April, it was like $368. Now it's almost 568, but it's like a 65, 60, what, 2/3 up? This is what, 65% up year to date, right? And that's what it would have been, right? It started the year over here. Yeah, exactly. All this year to date growth has come in 5 weeks. Massive outperformance. So this is, and the companies underneath these SMH, right? Let's look at the SMH companies. Let's go to SMH Holdings. Oh, we were already there, right? NVIDIA, Taiwan Semiconductor, Intel, Broadcom, AMD, Micron, right? These companies are like blown all the estimates in terms of their earnings as well as the stock price. Look at it. Intel is now valued at what, $700 billion? Close to 620, $600 billion. Right? And I don't know. I mean, I talked about Intel last year when it was trading at $17. Right? I think in July, August timeframe, something like that. We can go back. It was $17. Yeah, and it was a price to book value was like 0.7. I'm like, maybe I can take some position as a value play, right? Could be a falling knife, who knows? And I thought I was pretty happy with, I sold a covered call at 55 and then an 85. And I thought, come on, man, like how much greedier can you be? And now it's sitting 125. I don't think I can justify 125 as a valuation. Right now, it's all driven based on the anticipated demand of CPUs. Suddenly, the market has woken up to the reality that, oh my gosh, for inference, you don't need GPUs. All you need is CPUs to run your inference workloads. You need GPUs for training. Yeah, NVIDIA has cornered that market. But for inference, which is going to be the much bigger overall pie of the overall AI workloads, CPUs are good enough. And guess who makes the best CPUs? AMDs and the Intels. And that's why we are seeing AMD and Intel performing. The stock has performed. But really, does it deserve to be 124? Does it deserve to be like $700 billion company? Or whatever, $600 billion company? I think I still want to see the proof of the fact that Intel can deliver those chips. Right now, all this optimism is because Tesla, Elon Musk said, hey, Elon Musk needs chips. TSMC can't build it fast enough. They say, we're going to go and talk to Intel and basically contract it out to Intel for the terafab. On yesterday, there was a news that Apple is now going to work with Intel for their chip requirement. Right? So my thesis was government will not let Intel fail because we have only one company that is US based, US headquartered, US company that can make chips, which is Intel. Other one is the TSM, which is basically Taiwanese company, right? So that was my whole thesis. Just like I have a thesis for Boeing. I still hold Boeing shares in my retirement account. Thesis is there is no other company that makes planes, US companies. And government won't let it fail. Otherwise, we'll be 100% dependent only on Airbus. That was my thesis on Intel. In my dreams, I would never think that the stock will go to 125. But what do I know? Anyway, I don't think I'm going to defend my 85 covered call. I'll let it be called away. It's expiring in June. I'm happy that I made 5x in a year. You don't have to be greedier than that. If it continues to go high, let Intel report its earnings. I want to see what their CPU, especially those high-end chips, 5 nanometers and 7 nanometers and less. 5 years ago, Intel was basically wasn't even able to build the chips for their own internal requirements. They had to basically keep pushing out the timelines, 6 months after 6 months. I still want to see how they're able to perform and deliver the chips. And if it's such a great company, yeah, I can get back in. Right? But I don't think I can justify it trading at 127, whatever it's right now. But there is a lot of a call buying is happening. A lot of Reddit crowd is behind these, coming behind these companies, which are like, hey, you get those, the nostalgic companies, which used to be the darlings of the market, then basically went in the dumps, and now a lot of those are propping up. Right? You really need to know in terms of the companies that are actually delivering results, or the companies that are the shares that have gone high because market thinks that they can deliver results. Right? So one is based on hope, one is based on the reality. Right now, the Intel stock is all based on hope that they will be able to meet the demand for Tesla and from Apple. But remember, both of them are very tough negotiators. Right? So we have to see the economics of Intel work. All right, I'm getting some background noise, so I'll mute you, Johnson. So that's the case. That's my thought on Intel. I'm not going to defend it. And thankfully, I didn't short it. It looks to be a prime company to short, right? You don't see these charts, these parabolic charts, and say, come on, guys. What are you even talking about? The $40 to 124 in 5 weeks. It's a right to short it. But as a principle, I don't short individual companies. I have seen hedge funds, billion-dollar hedge funds going belly up because they became too cocky. How can Intel be 125? I need to short it. And I don't have to be. I'll watch it from the sidelines. I'm not going to short it, but I think it's too much too soon. Okay. So that's my thought on Intel. I mean, read some other comments. Okay, so Chintan says covered call 65. Dude, here's my deal. When I did the trade, I thought that was a decent price to get it. And 85, I did a covered call after their earnings. Right? The stock was 80 to 85. I'm like, what the heck is that 85? That's all at the money. I think I got maybe $9 or $10 worth of premium. I'm like, okay, so my effective cost of selling will be 95. I'm happy with that. Right? In hindsight, you might say differently, but over many years, I've been through situations where I let the stock got called away at 60. It went up all the way to 90. For a moment, it looked like, oh gosh, I'm foolish. And the stock went back to $3. Right? So being able to sell at 60, then in hindsight looks to be a pretty good deal. Right? So I'm not regretting. I just can't justify paying such a price for Intel. Right now, it's all based on the hopes. I have to see the yield. I have to see that Intel can actually meet the capacity and the demand from these companies. After
Vivek?
last, sorry, let me go through some other comment. Hold on. Just let me go through some other comments. After last week, do you have a thesis on BRK? I'm still bullish on BRK. I mean, Chris Bloomstrand recently did a podcast on I think the TIP. Not recently means it maybe 2 weeks old. This was released just before the BRK shareholder meeting. I didn't finish listening to it. I was listening to it yesterday. I didn't finish it, but he has done he knows the BRK business the best. He's done a value of the parts valuation. I think BRK might be the intrinsic value of BRK should be around 570s or something like that. Currently it's trading at 480. Now, but when the market is going gaga, when you have a lot of these growth companies, companies like BRK will not get the love from the market. And when the markets will turn the direction, these companies will basically you start to see some inflow. So right now, I think BRK, just based on the intrinsic value itself, the current business itself seems to be undervalued. Rest we have to see how Greg Abel. I think Greg Abel, in terms of operationally managing the business, is great. The bigger question is how good is he in terms of capital allocator, as a capital allocator for allocating and buying equities in other businesses, which he has to approve it. The ideas will come from Ted Weschler, who's the investment manager, but then Greg has to say yay or nay. Warren Buffett has unparalleled record in the world to be the best capital allocator. That's one area where Greg has to prove himself. But he's also pretty young as compared to Warren and receptive to a lot of new ideas. And so it could go either way. Right? So I've been selling put spreads on BRK. I just closed one on Friday and opened another one for June. If you get assigned, fine, I'll buy some stock. But I'm still bullish on BRK. What should one do if the stock is not way too much? My covered call is 520 for Sunita. 520 is for which stock? Okay, John is already asked it, so John can help on that one. Sunny, I do regret selling my Intel shares at like 25-ish over. Hold on to your thoughts. We never know. Like for me, when I regretted for a time being that I sold my stock at 60 and felt like pretty okay when the stock came down to $3. Right. But again, I think the 25 may be a way early to sell. I mean, my idea was that when I bought at 17, I wanted to hold it until 40, 45. And then when I hit it, then I said, okay, let me now do one at 55 and then did another one at 85. I don't think I can justify anything above 85. What's your approach to calculating companies' valuation DCF? I rather look at a reverse. I have done DCF on a few companies, but DCF will need me to project the future. A lot of analysts have done DCF. However, I don't have to do it. I mean, information is available. One thing I've realized is I rather than me trying to project the future and say what the current value based on the DCF should be, let me find out what the market is pricing in the current price. What growth is market pricing in? And if that growth seems to be like off the base rates, when I say base rates, there's a great paper from Michael Mauboussin on focus on base rates, which is called outsider view of when you're analyzing a company, and which basically tells you has any company done this in the history? If no company has done it, maybe you want to tone down your enthusiasm a little bit. So if I were to do a reverse DCF, this is called a reverse DCF. If I want to do a reverse DCF for Intel and I found out that Intel needs to grow its free cash flow by 40% per year over the next 10 years, I don't think any company has done it. Is Intel going to be once in a lifetime company in the generation of companies that will be able to achieve it? If that's being priced in, maybe possible, but is it possible? Yes. Is it like feasible? Probably not. So then I'll tone my enthusiasm or investing dollar accordingly. So I have done a DCF on a few of them, but then I realize your DCF is as good as your assumptions about a future, and I don't know about future, plain and simple. And there are a lot of a company like Morningstar will give you evaluations, and a lot of analysts do the DCF. I can just take it from there. What are your thoughts on AMD? AMD also shot up because of this. Again, AMD overall, I've never bought AMD. I just don't like its margin profile. I don't know, for whatever reason. I like NVIDIA margin profile way better than AMD. Both are in similar kind of business, right? Both are fabless. But if you look at an AMD and not chart, and look at this operating margins, etc., I'm like, what even talking about 11%, 10%? In fact, one of my ex-colleagues works for AMD, and we met at one of the, gathering, and we were just chatting about it. I'm like, dude, help me understand. You and NVIDIA guys are both in the same business. One thing that has kept me away from AMD, like stock price can go wherever it wants to, is the margin profile. Right? Whereas NVIDIA, if you look at NVIDIA's margin profile, they're like a software-like margins. So I've stayed away from AMD. Right now, there's a demand for CPU, and hence, I think the market is rewarding any company that can do anything with a CPU. But I'm not investing in for next 1 or 2 years. I want to invest in a business which, if this AI tailwind goes away, can still is a better business to invest in. Want to trade AMD? Sure. But I'm not getting into I don't want to look at from a trade perspective on this. And now you can look at it in terms of a valuation, etc. on your own, looking at 20 times the sales, 50 times forward PE. What are we even talking about? Right? For a company that is generating like 10% operating margin, I can't justify it. But stock price is different than the business and the quality of business. Right now, everyone wants to buy AMD, and they're willing to pay whatever price they have to. I am not the one who wants to do it. So I'll stay away. Lisa Su is promising $20 EPS in 2028. Yeah, so it's all, and then maybe it's priced in. Right. Then you can run, say, if it's $20 EPS, you're looking at 450. You're already trading at 22 times. Basically, you're trading at 22 times PE, right? For a company that is growing at what? Maybe let's say growing at whatever 30% revenue with a 10% operating margin, or let's say if they can squeeze in some operating margins more, 15% operating margins, are you comfortable paying that? Yeah. Right. So that's how you have to look in. So this 2028, this $20 EPS in 2028, market probably already priced in 60, 70, 80% of that growth in the current price. Okay. That doesn't mean to say that the AMD will fall down. Yeah, there are a lot of people who just want to buy calls and try to do a gamma squeeze through on the market. Basically, then the market makers will have to buy the stock, and gamma squeeze keep happening and it will happen until it will start to unwind. We have seen it many times. right? In many stocks, not the first time. All right. So, semiconductor, I mean, we didn't even look at another one, right? SNDK. Now there's on the Twitter, you'll see all those posts going across. If you had invested $25,000 in SNDK, you would be sitting at $1 million right now, maybe a year ago or whatever, like 2 years ago, $25,000 in SanDisk, you would be worth $1 million. But I guarantee you, if those are the folks who are watching their portfolio, most of them will basically get out way sooner. Only those who are investors, those who are dead, will go from $25,000 to $1 million. No active investor. I would say no, never say no. I don't know of anyone who will be able to just go through this from 25,000 to $1 million. It looks great in paper. Hey, if you had bought Apple and held to it, or Amazon you bought at $6 in 1999 and held to it, you would have been a multi-millionaire. Those who bought at 6 probably would have sold it at 20, 30, 40, 50. And then new investors came in. Right? Well, look at SanDisk. Well, like April, it was 500. Now it's already 3x. Even more, like same case as Intel. SanDisk is in a business which the cost, basically, the price have been just going down in one direction. Right now, it's all because the AI need a lot of storage. So the demand is coming up, but it's going to be cyclical demand. We've seen this story before. Anyway, given all the stuff that has happened, labor market continues to stay strong. And inflation is like, yeah, not like 4%, but it's not even getting down to 2%. So the market is pricing in no rate cut from Fed. So that puts the incoming Fed chairman, Kevin Warsh, in a very interesting situation, I would say. Right? There is absolutely no need. Markets are all-time high. Stock prices are going crazy. SPACs like UFO, ETFs is like up 8% for whatever. People are just throwing money left, right, and center. And labor market is not broken. That seems to be okay. And inflation is currently at 3.3%, but probably could go higher based on all that oil prices, etc. What's the need for rate cut? Well, that's what Donald Trump put him in the chair position for. So it'll be interesting to see if he actually gives a rate cut and buckle under the pressure, even though during all his confirmation hearing is like, I'm going to do what's the right thing. We'll see what's the right thing would be. But right now, market is not pricing in any rate cuts. So this is where like it is almost impossible to know what the market is going to do or to invest based on the macro. I'm not a macro investor. There are a lot of folks who are macro investor. Forget anything on SPY. If you tell someone that we're going to add tariffs so all our imports become expensive, going to increase the prices, inflation is going to go high. We're going to go and bomb Iran and then the oil prices across the world become more expensive. Give rise to inflation. Right? US loses basically loses its reputation and all this stuff. And do you think that the markets will go higher? No way. Well, look what markets have done. They're like sitting at all-time high. That's why I just can't. And the fact that, hey, we're not going to get any more rate cuts. So earlier at the start of a year, we were looking at 2 rate cuts and market was like, come on, we're going to get 2 rate cuts. We're going to get more liquidity. So markets will go higher. Now we're not even getting any rate cut. Our market is not pricing in any rate cuts and still sitting at an all-time high. Who knows? So what I'm going to do? I'm just gonna stay invested, guys. We have a improving economic backdrop. We got a earnings which is showing a better. And if I don't need money for next 3 years, that money will still be in. But unfortunately, or I would say fortunately, I have to withdraw money from my brokerage account because that's how I pay bill. So I will withdraw it, but otherwise, I'm just gonna stay invested and just manage the delta of your portfolio. That's all I gotta do. And this is the boring stuff that I have to say every week. There is absolutely no change in my opinion in terms of what week to week. When I ask me, okay, what are you doing? This is what I'm gonna do. Stay invested, manage your deltas, and basically manage your risk. That's it. So nothing changed. I have nothing new to say about it. And better if you could broaden out. So most of my positive delta trades, means the bullish trades, are on non-tech side or on the emerging markets, non-US markets. That's where I've a lot more positive delta in portfolio, right? Which is China, India, EEM, Berkshire Hathaway, ACHD. So that's where I have more positive deltas. On the new trades, on the US one, I'm still trying to maintain, hey, market's already up, so, decent one. And I just want to manage my risk over there. That's all. That's all my thesis is. Again, nothing new to share. Stuff doesn't change. Businesses don't change month to month or quarter to quarter, unless something drastically has happened. All right. Anything else? I want to share some other exciting stuff. Any other questions? Sunita asks, SNDK straight up, how's the valuation business? I am not. So again, these are all going up. I think because for a short term, let's say in the near future, you see all the demand. But I'm not investing in SanDisk for next 2 years. Over a long period of time, we have gone through these cycles of tech where there's a lot of demand for storage, and then once that initial demand is met, the stock just comes back down. Business-wise, it's not a great margin business of building storage capacities, plain and simple. So I'm not too enthusiastic about SanDisk as a business. Yeah, revenue growth is there. Maybe will be there maybe for next 2 years, as long as this AI tailwind continues. But just growing by revenue doesn't mean you're going to grow your margin. Maybe you can extract some economies of scale, but looking at a SanDisk and the history of its, okay, SanDisk basically got spun out, so don't have much history. But if you look at what is Western Digital, from a margins perspective, you go back and look at it, it's been a pretty low margin business. And I don't like putting too much of capital in these low margin businesses, right? 5%, 3%, or operating a profit margin 18%, 10%, 11%. I think there are better businesses out there. That's my feel. So I'm not having any FOMO on SanDisk or Western Digital or any of these companies. On emerging markets, were more concentrated than US at this point of time around Korea and Taiwan. Korea and Taiwan are more concentrated. They historically have been concentrated. But let's look at what are the holdings on emerging market. You got a TSM, Samsung, which I don't own in my portfolio. SK Hynix, I don't own in my portfolio. Tencent, I don't own. This I own. It gives me, some of the other companies that I don't own in portfolio. Again, I'll probably show you something else, which, like I said, some exciting stuff, which will give you some insights into what else do you hold. But either you pick an individual company. I just don't want to own a lot of individual companies in a portfolio. So I just wanted to pick up something which is outside. And emerging markets also benefit more when the oil prices will come down. So that's my thesis. That's why I pick EEM. If you want to go big on a Korea and Taiwan, you could pick a country-specific ETFs also. I just don't want to do that country-specific. I haven't spent much time on Apple because Apple, there are tons of analysts who probably would have done much better job of dissecting Apple. I just know Apple is a big cash generator, 2.5 billion devices in people's pocket, and they don't know what to do with that cash. So I just want to be an investor in Apple. And I don't really, bother myself much about trying to dissect on each and every move of Apple. Somehow I feel they may be a big winner in the long run on AI, in which they have not invested billions and hundreds of billions of dollars in building the base LLM models, but they could become a distribution channel to distribute the capabilities of all the big LLM models. Again, my opinion is we are very early in this AI game. We don't even know who's going to win. Nobody talked about Anthropic a year ago. It was all OpenAI. Then came Gemini 3.5. Now forgot about Gemini. Now all we're talking about is Anthropic, right? So we're way early in game. I strongly believe that on the model level, there will be a fewer models who will survive. All models are good enough for they to work. They are at this point, they all are good enough. So kind of get commoditized. Maybe some will become especially good on one particular aspect, and the distribution might become more important. And unless Facebook replaces the phones with their glasses, I think it will be difficult to dislodge Apple as the biggest distribution channel for these LLM capabilities. So I will stay invested in Apple. I really have not looked at what they're doing in India, and just don't have a time. It's a great company, good cash flow generator. Now with the new CEO, probably could do a lot more innovation than what Tim Cook used to do it. But I admire Tim Cook. It's not easy to sit on billions of dollars cash and not do anything. CEOs will do stupid things of buying some new fancy companies, new shiny companies. Tim Cook is not one of them. So I admire him. What's your take on SEC proposed amendment to permit optional semi-annual reporting by public companies? I'm okay. A lot of the question is, here's the deal. SEC says you are okay. You're not mandated to report quarterly, but if you want to, go ahead. And if you are a company, if your competitor continues to do quarterly, you will still continue to do quarterly. Europe companies are not mandated to report quarterly. They are only mandated to report like once in 6 months. It's half yearly. But still, a lot of European companies, they report their numbers quarterly, even if it's not mandated by European regulators. So I don't think I'm bothered. Yes, 3 months, 6 months doesn't make a big difference for me when I'm buying a company for next 10 years, right? 10 years, 20 years. So, but yeah, if you are like trying to trade in or want to hold a swing position, for them it might matter. So we'll have yet to see. It probably could be a competitive pressure that the companies will still give quarterly report because their competitor is doing it. So yeah, that doesn't bother me much. Rajiv say, I don't have account with Interactive Brokers. Where to trade Korea stocks directly? Yeah, Interactive Brokers you can trade directly if you want to.
It just started a week ago.
Oh, okay. No, I know Interactive Brokers, you can buy stocks on that particular exchange. Something that I'm wanting to open an account, but I've never been.
Well, like the only other way till last week was to buy the Korea ETF, which is EWY, or actually another fund.
No, this will be OTC, right? Some of them might trade on OTC market.
No, there's no way to trade, say, SK Hynix or Samsung at all from USA.
This doesn't trade on OTC market.
No. So
you got a leverage ETF. This is a France Luxembourg exchange.
For a US resident, there's no way to buy or sell trade Hynix or.
I don't know. I mean, some of these stuff that don't trade on US exchanges, but they trade on OTC market, you can still buy it. But anyway, yeah, but if you're an interactive broker, you can directly trade on foreign exchanges.
IB and Schwab does allow you to hold international stocks in their currency.
Oh, Schwab also allows it?
Yes.
How do you trade the Samsung stock in Schwab?
You need to look at the information. There is plenty of information about that.
Oh, okay.
See, John mentioned DRAM ETF. You know the crazy thing about DRAM ETF?
Yeah.
This is round hills. It only was launched recently. It has become the most successful ETF just behind Bitcoin.
I can't believe
in terms
it.
of the asset under management. Just behind Bitcoin ETF.
It shows how serious this DRAM shortage will be or is.
There is folks are going crazy. It's already, it's its AUM is now, it was launched like on April, and where is this AUM?
It's very expensive, like 7.7%. Oh yeah, right.
65 basis points. So it's AUM.
I would rather buy EWI. It gives you about the same return.
Maybe it's too early to even file for AUM. It doesn't show me what's AUM is. But anyway, I think it's more than $1 billion. I saw Eric Balchunas talking about DRAM, and he is the best ETF analyst we have in US. So that reminds me, yeah, this has been like a crazy ETF. Just behind Bitcoin in terms of how quickly it's been able to gather these assets. All right. I want to show you something exciting that's been cooking around. I think I did talk about it a few weeks ago, but now it is at a stage where I think I can give you a peek in terms of, and maybe if you want to, if you're interested in it, maybe sign up for it. So this is what I was working, right? It's been on my mind as an individual investor over the years. I always felt the gap of none of the brokerage firms do a good job of giving you insights into how your option trades are performed, or actually combining your option and stock to know how you're done well. Even if you're holding a stock, doesn't give you good insight into what's the overall exposure, right? Let's say I hold Google, and then I hold QQQ and SPY, which also hold Google. How do I know how much Google I hold, right? So over the years, I've, things that have helped me. And then for past few months, I've been working to build something that for my own self. And if you're interested, probably I can offer private beta, etc. But this is few things I want to share with you. I think there are a lot more stuff than just this, but something if you're interested, do let me know. For example, P&L calendar, right? Extremely helpful for me. You can look at your option trades or stock plus options or only options on one particular account across all your accounts, etc. This gives me a great visibility into how am I done in a calendar view, right? Hey, and this was not a good day. Let's say, of course, this data is not a real data. But pick an April, Wednesday was not a good day. Maybe I did something on Thursday, I sold, and it's been the best day for me. Right? You click on this, it'll tell you what are the trades that you have done. Right? So you can do it at a month level. You can do it at a year level, all across all your years. Right? So you can see which years were positive, negative. You can get a whole carpet information across all years, across all months, and they can drill down to an individual trade level to see what's working, what's not working, right? Something that will be very, very helpful for me in managing my own positions. Other stuff, you always wondered, how do I know what's my cost basis is? I tell you hey, I bought the stock at $10, but I've sold $8 of premium over the last many years. My net cost basis is this, right? Now you know it. So this is another one, which is will tell you the stock that you hold, option premium bank till date, and what's your net cost basis would be, which is, and of course, if we received any dividends, subtracting that. How this helped me was, I know that option ratings have actually helped me reducing my cost basis, right? Otherwise, why would you put so much effort? It's not effort. It's not that I bought some long out of the money call and just sat and has a lottery ticket, right? As an option seller, and those who are option seller probably understand this, there's a lot of work involved. But is it really worth it? When I look at my portfolio, I realize, come on, 80% of the stocks I've been able to reduce my cost basis. Some of the stocks are now free money for me. Right? How do you know how you've done it? Your brokerage firm doesn't tell you that. But this will tell you what's your overall premium bank, what's your net cost basis, so on and so forth. This has been the most impactful one. Rolling, right? So John was saying, hey, let's roll your trades, or Jose was saying. If you roll your trades, and if you're looking into your TD Ameritrade or Thinkorswim or Tapestry or any of the brokerage firm, you just don't know what's your net position after the rolls is. So for example, this is an ASML Iron Condor. I started with ASML Iron Condor, rolled on the call spread because end of March, everything was going down. So rolled on my call spread. But then it started to go up, did a put spread, sold a put because now I'm challenged on the call spread, then sold a call, sold a put, and then then I rolled it out to the May expiration. May expiration call I sold is $42. If I look at my brokerage form, it will tell me that I got $42 of premium. So if I'm able to close it at $30, that should net $10 in a profit. That's what the brokerage firm tells me. Actually, no, it doesn't. Because if we take all these things that were connected to the same trade, my only premium is only $25, not actually $42. If I account for the losses that I've taken earlier. So I'm like, okay, gotta build this. So now I have a visibility into what my net premium after all the rolls that I've done. Right? And now I know that if I were to close at 50% of target of my net premium, I'll close at $12. If I want 60%, I should do a GTC order for $10. This is extremely, extremely helpful for me in order when you're rolling a trade. I don't know why none of the brokerage firms do it. And if you are a serious investor using options to manage a portfolio, and I don't know how you can survive without this. It would have been very difficult for me to do this. Right. So there was a question, it's not showing buy or sell, it's only sell, because when you say a buy, you basically actually close the trade. So when you say close, it means I basically bought back and closed the trade. So that's get adjusted into your closing price. It all shows what are the trades that got opened, and then the closed means you already bought it back to show the closed ones.
So is this a publicly available tool?
Not yet. I haven't opened it up yet, but I've started to use it for my own stuff starting this week. Like, remember, I used to, like, on my website, you can see in a Google sheet the trades that I've done, right? Now from Friday, I started to put it in, use this system.
And is this using a publicly available API like called Optimizer?
No. This is what I'm building. I'll open it for private beta. This is what I built up for private beta. Beauty thing is, this is what I like to give me an overall view of how the trade has moved towards journey. And this is a screenshot, but if you hover over this bubble, it'll tell you what exactly trade you did.
What programming tool did you use to build this?
We'll come back to that later.
Okay.
Right. And again, I've taken a few screenshots. Other thing, which if you are an option trader and a lot of a new, and I got bumped, so I had to write my own scripts on Google Sheets and Excel to figure out most important thing is my cash flow. What the heck if I get assigned on the trades? Am I running out of cash? So build myself, if the trades expire on 15th May, if I have these which are uncovered ones, or no, if I have these short positions, and if all of them get assigned, I'll be net 13.5K will get out of my account. And if you have a uncovered, it will tell you, hey, you have a 3 covered calls, but you own only 100 shares of Intel or whatever. This is uncovered, right? It'll give you an indication so that you know that you're not gonna get into a position which will, gosh, I ran into a naked call and now I'm exposed completely because it's an uncovered, right? This will be extremely useful so that you not get surprised that suddenly your cash position has gone negative because you got assigned. And I don't think I have a screenshot where I have another model which will tell you if you want to track, hey, if my stock is like within 10% of my assignment strike price, show me that it's a heavy risk. So there's another view which will tell you elevated risk of assignment, medium, keep it on a watch list. And the combination of both will tell you how is your portfolio exposed in terms of cash positions. Okay. What other thing? This one, income opportunity, right? Say you own some shares. Say you own 200 Apple shares, or let's say 500 Apple shares. And I'm a long-term investor. I want to always have 400 shares in my portfolio, come what may. But 100 shares, maybe I'm ready to take some swings. So I can define, and what I've been talking about for the last 2-3 years is a coffee can. After I read the book 100 Baggers, I borrowed the concept of coffee can, in which I'll say, I always want to hold these shares. So I'll designate out of like 500 Apple shares, I'll designate 300 in my coffee can. And 200, yeah, maybe I can sell some covered calls, right? So this view tells me, like, so for example, INDA, I have a 300 shares, nothing has been in coffee can, so you probably can sell 3 covered calls. Look at KWeb. KWeb says, oh, you got a 900 shares, 300 you're designated to keep in coffee can, and you already have sold 300 are blocked in a short calls. You might have you have an option to sell 3 contracts of KWeb, maybe to generate some income. At least it'll give you a view. So otherwise what happen is, if I have a lot of tickers, 30, 40, 50, 60 tickers, you may be sitting on a portfolio which is not doing anything for you. I'm not saying you should, but if you want to, this will give you an ability to see where there are opportunities to generate some income. Right? So that's another view. This tells me, which is whatever. Hey, what are my open positions? When are those expiration dates coming up? And highlight the ones which are earnings are coming up. So let's say this Baba. It tells me that Baba, I have a position which is expiring on May 15th, which is 6 days out, so it's in red. And there's an earnings coming up on Baba. And you know the risk of earnings. If you're trading options, you know how the stock will behave on earnings, right? June 18, I have a JD and Neo positions which are still open. And these two have earnings coming up. So on and so forth. I'll tell you total premium that you have on this one, how many trades are open for these expirations. And then when you expand, it'll tell you all the trades behind that. Right?
Vivek, can you explain what is your coffee can idea? Are you saying that you want to keep the 300 shares?
See, here's the deal. Yeah, so here's the deal. When I say coffee can is, again, somebody told, oh my God, I sold Intel too soon. Right? When I'm buying a good company, I want to say, let's say I bought 100 shares, 200 shares, 500 shares, whatever. And I say, come what may, I want to hold these shares always in my portfolio. As long as the business continues to do great, I always want to hold 300 shares in my portfolio. And I want to play with 200 shares for generate income and cash flow because I need to pay the bills. So I go and right now I do it on Google Sheets and all that stuff, very cumbersome process. But now I can go and in my portfolio, I can say, okay, 300 for app or 300 Apple put in coffee can. Right? I'm a long-term investor. Overall, there is also portfolio view, which will tell you that 70% or whatever percent of your portfolio you put in coffee can means you don't want to touch it. Let it grow. But yeah, maybe I can take some swings on remaining portion of shares. Right? Because what has many books, if you look at it, some of the great shares, if you held it over long 10, 20, 30, 40-year period, that's where you get the most of the returns. So I don't want to put myself in a position wherein I had 500 shares of, let's say, Apple, and I sold 5 covered calls. And that Apple got called away $300. And then I'm repenting, gosh, all my Apple shares got called away because right now Apple is trading at $600, whatever. You get the point. So I started for my own management. I think in 2023, I read a book of Chris Meyer, 100 Baggers, where he explained the concept of a coffee can. And I talked about it. And then I started implementing in my own portfolio management. Same thing. Now I've added it here because it has really helped me in terms of adding, holding some of the shares and playing only with the remaining shares. So that if the stock goes to become a rocket ship or goes to the moon, at least I'm not, gotten out on my full quantity as I'm still in the game. And as a long-term investor, if I look at my overall coffee can, I want to make sure that 60 to 70% of my portfolio is designated as coffee can, that I'm not going to touch it. And I'm going to play in selling covered calls, etc., or whatever option there is on the 30% of the portfolio. So that's the whole concept. I think there is a lot more literature on a coffee can style of investing. I just picked this up from Chris Meyer's book and hit it, right me here. I'm like, I need to implement this. So the whole concept is like the Westerners in US, you put your dollars in a coffee can, stash it or bury it in the ground, and then or stock buried in the ground. Later on, your next generation will find out, wow, that's a lot of wealth in that. That's the whole concept. Do nothing about it. Don't trade. Don't do anything.
So does your tool connect to the portfolio in Schwab?
Oh, I'll tell you. Yeah. So right now, the way I built it is not directly connected, but right now when I buy a trade, I don't buy very often, right? I'll just go and enter and say, okay, I bought the stock. Right. But there's a way you can load your initial data also. Either you could do the enter manually or you can upload the CSVs. What I'm most excited about is this one, which I know you'll have struggled. I have struggled, is getting a telescopic view. I own QQQ, I own SPY, I own SCHD, Google is in QQQ, Google is in SPY, and I also own Google shares. What's my effective Google position? What part does it constitute in my portfolio? So dude, I'm not a brand guy, so I'll come up with a view called telescopic view. Maybe I should call it as microscopic view, whatever. Who cares? If you want a better name, tell me, I'll change the name. Which basically, if you get into that view, it will tell you own Google. Directly, I own 200 shares of Google. But because I own QQQ, 7.26 shares are coming from QQQ. 6.23 shares are coming from SPY. So via ETFs, I have 13 more new Google shares. Effective total is this. Overall, Google is 9.3% of my portfolio. Right. Without that, Google may be coming up by 8%, 7%, whatever it is. So this is more because my biggest position is SPY. But I still want to know what company do I hold and which I need to watch it carefully. Right? This telescopic view will tell me. Right? I own XLE, so right now it says SCHD, QQQ, SPY, XLF, XLP, or whatever other ETF. It will basically dissect into ETF and pull out the holdings and tell you, if you add it to your current holdings, and it'll tell you what's the total newer portfolio percentage would be your individual stock, assuming you have all those ETFs. Okay. So I'll tell you what's your real risk in owning that company is. And
Vivek,
especially more important because the SPO these indexes becoming way more concentrated. You really don't know how much of NVIDIA you own unless you dig deeper into it.
Vivek, you are just 6K less to million. Awesome.
Yeah, if these are the numbers, I would be happy, man. Okay. If there's a real numbers, yeah, sure. Last thing, we've been trading options and I've tried to, again, there are many more views. I picked up a few stuff in terms of how you want to analyze. Calendar view, I already showed calendar view, right? Yeah, so calendar view, you've already seen it. But now this one, calendar view is on a daily basis. This is not a calendar view. This is what stock, which month, what's your net on this one. And then out of the top, this I picked up like a yearly basis. So overall year, your P&L on option trades is this, total takers you traded this, best taker you made money is QQQ, worst is this, best month is this, worst month is this. One and a few more stuff we can add, I can add some more, but it'll give me a glance of, okay, which ticker has been best in terms of option trading? Or if I find something, oh my gosh, why did I lose like $4,000 on Baba in October? I can click on it and get the details of that trade. Analysis become way, way quicker. If you don't know what you've done, you can't improve. I spent whole my tech life around managed projects and customer programs, and I've been a stickler for tracking. So brought up the same trade in terms of from my investment perspective. Right? This is your daily ledger. How you on a daily to daily basis, right? Hey, did you make? Did you lose? What's your running total? Average active day. You looks like you traded to 60 days. You probably made to on an average made to 65. Somewhere I should add a median because average could be skewed by the outliers. So let me take a note. I should add a median. This will tell me, dude, I'm spending so much time. Is it really worth it? I mean, at least making like $400, $500, whatever your target is, right? You can define your target, then you can see how far off the target you are on average, right? Best day, worst day. You can do it for a year. You can do it for across years, which you can pick up a year. You can pick up a particular account. Let's say if a shop, you got a TD Ameritrade, you got blah, 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 2, 3, 4 brokerage accounts. You can look at a particular account level, year level, whichever way you want to. This is your daily ledger, right? Open up, say, not a good day for me, whatever. Right? You know what I'm saying. This will tell you around your each symbols. What's the net P&L? QQQ net P&L is 22K, or Tesla, I click on Tesla, you get all the details of all the trades on Tesla. Tesla net profit is $7,000. You closed 39 trades, 0 trades open. This is how much you sold, premium sold. You basically been able to get 30% of your premium, be able to retain 30% of your premium. I think I have a few more views or not. This is, there was one ticker versus month. This is strategy versus month. Then I would like ticker versus strategy, then I would ticker month. You can drill down whichever you want to, right? This is strategy and month basis. Which strategy worked, what month, and then again, you can see the trades that contributed to it.
So Vivek, it'd be nice if you can reconcile this with a year-end 1099, right?
No, I don't, because 1099 is based on the IRS. I want to look from a trader perspective. So, for example, and a lot of revelations comes when you start to build these things. You realize, oh, the brokerage firm treats this differently. For example, I buy a share for $100. Let's say about 200 shares, each for $100. Okay. Then tomorrow, I sell 100 shares for $200, right? What my net cost base is as a trader, what my net cost base is. The way I would want to look at it is, I spent $100 on 200 shares, $20,000 I spent. Next day, I got back my $20,000. My cost of owning the other shares is zero. Basically, I took back all my money. This is how I want to view as a trader or as an investor. If you look at a brokerage statement, they'll say the cost basis is still 100.
No, I get it, but it'd be nice to make a correlation, right? See a percentage of true winning, right? So.
No, not from a 10, because the 1099 view the cost basis differently. So I'm not want to try to match it with 1099. I want to match in terms of percent winning, etc. I have all the data. But in terms of, I think when it comes to option trade, you basically have you close an individual option trade. But when it comes to the stock, I've just used FIFO to see you sell basically the first in, first out. More from an options perspective, I want to look at from as a trader, I would want to view my profit and loss, not from a tax treatment point of view.
So essentially you're tracking this manually, right?
No, this will become all automated. So I'll come to that. All I do is when I do my trade on Thinkorswim, I right click, copy and paste the trade. And then it basically dissects and does everything else. And because I also want to track some notes against it, I'll tell it, okay, this was the stock price when it bought it. I put my notes why I'm buying this, because the biggest thing that I'm missing in Thinkorswim or anywhere else is the concept of journaling. I want to journal my trades. I want to see why I did what I did. What was my thesis behind it?
Doesn't Tasty Trade have something like this?
Yeah, try journaling. Try journaling. I tried it. Try journaling. I tried it on Tasty Trade for last 2 years. I mean, first I tried. I've been doing it even before Tasty Trade implemented it, and then they implemented it. I thought, let me try it. It's pathetic. It's pathetic. They also have order chains, which is like you can track your roles. Try it.
So essentially, every time you place an option, you log that, right? You don't wait till the end of the month.
Yeah, just log it. If you have done 10 or 20 trades, all it take you 2 minutes to just log it in.
All right, man. Scale up your stuff, man. I'll pay you a subscription to get your stuff, man.
So I will probably open it to private beta if you guys are interested in this one. But I think it has helped me a lot in terms of managing my own portfolio. There are a few other stuff that I don't think I've been talked about it in here. Maybe I'll update it. This is what I just built in like today morning. Some text may be wrong. Somewhere but just want to give you a preview of, I think it's at a stage where I thought I feel comfortable to let you know, some of the stuff that I've been working on. Hopefully this is exciting for you.
I see you have a lot of free time.
So I got frustrated because none of the brokerage firms do it, man. I'm like,
this is good. This is your income ticket, buddy.
I gotta build it for myself. I need to know what my cash flow is and how my trades have been moving and all that stuff. So
since you want to make it public later on, what is the plan for connecting to the brokerage? Is it going to be always via right click and paste?
You can upload also CSV, but here's the deal, right? When you do an upload of CSV, let me tell you, I've learned so much in trying to ingest the data. Thinkorswim is actually sending me some wrong data. The way the Thinkorswim will parse and send the data is at an individual leg. Right? You do an iron condor, Thinkorswim will send you 4 individual trades. Tasty will send you 4 individual trades saying short call, long call, short put, long put. How the heck you know that is an iron condor? So that's why I'm not directly connecting to them yet, because they're not grouping them together. In your mind, when you're doing an iron condor, it's an iron condor. All those 4 trades are connected. But when they store in the system, or when they give you through an API, etc., this comes as the 4 separate trades. So what I did was, I started logging my trade, because I've been doing logging in my Google Sheet for years. Instead of now going to log in Google Sheet, I'll just right click, copy, paste, and just put in here. Maybe I'll show you, how you can.
You need to implement a slowly changing dimension to track your time, day and time. But it's a lot more complex, right? So.
Yeah, and I mean, for me, it doesn't take much of a time. Let's say let me just bring this stuff, right? So.
And what's the user interface built in?
So let's say I select what account I'm trading in. And when I say the trade string is basically, if my Thinkorswim is open, then I can pull that out. Okay, let me open my Thinkorswim.
So
basically, this string is when you right click on your Thinkorswim and copy, just paste it here. That's all you need to do. And then you can select whatever strategy you want to bucket it under, put your notes. That's the only thing. And open date is whatever the today date is. That's all you need to do. It's like take.
Hey, you see on the top right there, top left hand side, it still says not secure.
Oh, this is my local environment. It's my it's my local machine. It's not the live one. But that's all you need to do. And similar thing on the stock. Say which date, like stock did you buy? Did a short put got assigned or whatever? And then tell you what stock, what quantity, and any of the notes if you want to capture your notes.
Pretty good stuff. Good job, Vivek.
I'm stickler for notes, so let me just tell you in terms of hey, let's pick up some trade history. One sec. Okay. I'm going to account statement.
Can you just copy the trades done for the day and enter them?
Yeah.
From Thinkorswim as a CSV file?
If you do you could do on a CSV file, but the CSV file doesn't give the data in terms of how you may want to see the trade to be. Like I said, CSV file will give you 4 separate trades. How do you know or tell the system that, hey, this is not 4 separate trades, this is 1 trade? So let me tell you, let me show you, right? So for example, all I will do is how do I split the screen? Oh, come on. It's so difficult to drag Thinkorswim onto another window because there's no space for me to hold the Thinkorswim. Okay. So you can see this, right? You can see a portion of Thinkorswim or?
No.
No. Oh, okay. Oh, sorry, I had to. Now you can see this?
Yes.
So all I need to do is, okay, copy, paste, and then put test. Whatever, if I want to track when the stock was open, let's say whatever, 1650. This is my put spread. This is not long. This is short and done. Save the trade.
Vivek, one other idea. Maybe you might want to keep track of the delta and the extras.
Yeah. So there is a way for delta IV, because I capture IV. I know, then I can see higher IV, how much premium I got. You can take care of a delta. You can all take care of your PBWD. But I'm not seeing the basic information. That's all you need to do. So it doesn't take too much time unless you want to track a lot more information, which I do. I do track what the stock price was, what was the IV when I opened this, buying power, did I open this as a just like net 10 delta, positive delta, negative delta, whatever.
Vivek, if you want to put a couple of sentences on what problem does this product solve? What it would be?
This will give you insights onto how your portfolio, including options, is working. The basically to get the insights.
Yeah, that's only if you've done it in the beginning of time, right? I mean, you've done this over 10 years of trading, so there's a lot of data that you have to, stage up, right?
Yeah. So it's not easy. There is always a first time when you start, right? There is always you have to start somewhere. So if you've never done it in the past, maybe start now. When I started my journey, I started on day one. You could also upload. So right now I've uploaded all my data from 2017, right from day one. So my first trade is also in the system. So I have a full visibility of last 10 years of all my trades and what does not work, etc. But let me tell you, if you want to do on a historical basis, you probably have to work with each one of you individually, because Thinkorswim spits so much of a crap. Like I have a trade in which expiration date is June 2014. I'm like, dude, I didn't even have an account with Thinkorswim. Why the heck my numbers seem to be little off in this particular ticker? Then when I dug deeper, I realized they're sending a wrong date and all that stuff. A lot of crap. So but let's say if you're starting now, this is the cleanest way you can start. Otherwise, because it'll give you individual legs, you don't know what strategy work, not work, etc., etc.
You were tracking everything in the Excel before, right?
Yes, in Google Sheets.
So I think somebody already asked the questions, right? You can't essentially import a CSV in here, right?
The CSV is, but then, okay, what I also realized was, when I look at the Google, I think I made some ticker, some trade I forgot, etc. to add into my Google Sheet. But in any case, trying to add you could add full Google Sheet, sure, but mine is spread across, like every year I renew it. So at the end of a year, I have a renewal process, because otherwise the Google Sheet becomes too cumbersome. So I have like 10 separate Google Sheets in there. And I know that a lot of other folks don't track anything in Google Sheet, but you could easily download the CSV from tastytrade or from Thinkorswim and upload it to get the historical data. So that's why I built it, so to get the historical data. So right now I've integrated 2 brokerages, tastytrade and Thinkorswim. Fidelity will be the next. I'm gonna integrate, and then we'll go from there.
When you say integrate, what do you mean integrate? I mean, what data are you getting from that?
No, integrate means basically upload the CSV. Every brokerage firm sends it in its own format. I have seen some other systems. They will tell you, okay, this is the format, you give me the sheet and we'll ingest it. I never want to do that, because you will die in putting that data in that format across different brokerages. They all have their own stuff.
A lot of issues, yeah. Data
I'm like, not gonna do it. Let me build up a way in which I can ingest as is come from brokerage. All you need to do is download it, tell what's the cutoff date the data has in the CSV, and then upload it.
Kind of like QuickBooks, right?
Yep.
Okay.
The next one, in the future, we could look at maybe, and I don't think how many people are comfortable, because I have worked in this industry for more than a decade, and only people, like, you could build direct integration with an API, but I'll need to ask you to give your user ID and passwords, use a Plaid to integrate with the brokerage firms, but then I don't know how rich their APIs are. When I was working in a data aggregation company, and the reason is the moment I left that company, I realized I can't use my own product. The moment I become a little bit more serious about managing money. So our product was used by, and it's still being used by, Bank of America for their My Portfolio product, where you can add your external accounts. Fidelity uses FullView. You can add your external accounts. I used to manage all these customers. Citibank has Citi Tools. These are all the products that we built. I worked for 10 years building those products. But it is only at a level where you are a very basic, want to get budgeting information, get your net worth, and maybe set up a goal. The moment I became a serious investor, I'm like, dude, I can't use it. Then I used to ask my product guys, I'm like, why are we not getting this information? It's like, dude, this don't provide it. So that's why I'm like, okay, at least the CSV has all the information. Let me just build it and ingest it. Sunita says has an arrangement to put your trades in grouping like long call, sell put, and it's given. I have seen in terms of the grouping on Thinkorswim, but the idea is how do you download it and have it in a CSV in the same way. Number two is I just don't want to get it limited to Thinkorswim. I want to make sure you get an information across all your brokerage account, right? So if I want to see Apple, how much money I made on Apple and selling option in Thinkorswim, Tasty Trade, in Fidelity, or whatever 4 or 5 brokerage accounts that you use. Okay. Maybe in a week or two, I will be in a position wherein I can invite some of you. I have to figure out the home for this. But invite some of you to maybe try it out. So I will open it for private beta, but it's going to be only for people who are really serious about around the option side. If you're looking for portfolio, hey, just tell me what's my net worth is. There are many other tools. Don't even bother here. But really serious about managing your own money and get the insights that I don't think anyone provides it. Then yeah, just express your interest. Just sign up for a wait list. I want to start only with a limited number of people so that I can guide you through the process. It's a little, especially if you want to have a, at least want to guide you in terms of how to ingest it and all that. So want to start very small. I built it because I want to use it. I just don't want to become too burdensome for me. Like 400 people have signed up and now I'm like spending all my time in trying to debug these issues. My main objective is still focus on investing. But this is of my own work. And my next would be to start integrating the analysis. Like we have seen that analysis and earnings review and a 13F analyzer for an individual stock. I think that's already there. If you click on an individual stock in a portfolio, it'll tell you which fund managers hold what. Right? I want to integrate all the stuff. There are other calculators that are built on Excel, like bond ladders, retirement calculator, which I put my scenario, sequence of returns. I want to build all that and get rid of all my Google Sheets. But so someone told me this will be useful for others as well. So I thought, okay, let me open it up for others as well. But it's going to be a limited one. Could not put name in the video. I didn't even check this. I just built the page to say, hold on. Does this one work? Hold on. Select my broker, Fidelity.
It works.
It works.
It works? Okay. Yeah. So probably I'll get 10, 20 people. I'll have to see which brokerage firm because I have Tasty, Thinkorswim, these two I've built. Fidelity, I'm going to focus next. And if you have a E-Trade or any other thing, probably will be wonderful. So that's the new stuff that I've been working on for some time. All right. So if you want to join the waitlist, there it is. And we are done with this. John says the startup seeking angels? No. I don't think I want to go and raise any angel funding.
It's too early.
The idea is I moved into investing to become independent. I just don't want to now have another set of bosses. And their objective will be different. Their objective will be to scale, to get to 500 users, 1,000 users, 10,000 users, 100,000 users. I want to have a smaller community, more engaged ones, but lot more serious about this stuff. Right. So my objective is different. Sam has his hand up. Oh gosh, we took a lot more time than what I thought I would. But hopefully this was interesting for you, gave you some insight into what I've been working on for some time. Yes, Sam.
Vivek, I think I brought this up in the past. Claude doesn't let me play around with it. And as a result, I'm paying. Actually, Google is warning me against that their fee is going up, which is not a lot of money. But I mean, like I said, I really tested Google on their free basis, and they did very good for me. And Claude doesn't let me test, but I hear Claude is better. Should I be concerned?
All LM models are good enough for our usage. I would let me put it that way.
Not Bing. Bing is pretty bad, and they even admitted. I asked them why they can't do this stuff, and they tell me why they can't do it.
Okay, so when I say all good in terms of, let me say, in terms of some of the coding work, you still need to know the logic. I can tell you how many times I had to basically go to the Claude and tell it this is wrong.
Oh, so it's the same. It's the same
because it still doesn't understand how to think like an option trader / long-term investor. And tell me, oh, do that. No. This is not how the stuff works. You'll end up into these gotchas. So just don't do this. So I have to tell it, let's make a plan. Don't write even a single line of code unless I've walked you through and I'll tell you what's the right thing to build. So you need to understand. So that also gave me a little bit of I'm like, hey, if I were to go back for a job, maybe I think there's still a role for me because it can code, but it doesn't know what to do. So I had to tell you, no, this is not how an option trader would like to do it. This is not how you will think when you're investing or trading. This is a different way. I want you to do this. I had to correct it many, many times.
So yeah, that's what disturbs me about Google. I'm always telling them this is not what I said. And
yeah. So
thank you for telling me this Windows 3.0 type of situation.
No, it's that same stuff with the Claude also. Sometimes you wonder it works like a PSD because it will solve and write whatever stuff, and then it can't understand the things that like a normal investor should be able to figure it out. And I have to correct it. No, this is incorrect. Sometimes it'll make just a very basic mistake, which will make me wonder why the heck. It's like a little bit on the architecture side. And I'm not a system architect. But then I told, why are you even creating this new table and why are you writing these, like connecting these keys? We don't need it. Here's what you can do it, which is already existing. Then I'm like, wow, you found an architecture gap. What the heck are you doing? So yeah, so there is none of these tools are perfect. You need to know your shit before you ask them to do anything.
So Vivek
made all these mistakes.
On the 14th, my rate is going to go from $3 to $8. Can you believe that? And then Claude, that's why I panicked because everybody else is raising their prices.
They have to make money. All right.
Well, Vivek, which plan are you in? I mean, why it is downplaying?
No, I'm on a max.
Oh, okay.
Yeah, I moved to max because otherwise, like, I was just my whole rest of the life was surrounding around the open, like when the window is open. I said, dude, this is even worse than a job. Now Claude was controlling my calendar, so I said I'll switch to max.
Okay.
Yeah. All right, coming back to this one. So yeah, so if you find this is interesting and sign up for it. Let us still have to decide in terms of pricing, etc. But like I said, I want to make that as a new home for a lot of stuff that I've been working on, and I've showed you some of that in some of these meetings. But yeah, it comes at a cost. Our recording will still always be available for free, but a lot of other stuff which is very specific on towards investing, that'll probably go behind the paywall, including this one. Cool. All right. Looking at a fear greed index, we are still in a greed, and sector wise, nothing to complain. I mean, SPY is up 8%. Financials hopefully will become better once they start getting an IPO, right? IPO becomes better, the market will open up, but we'll have to wait and see. Upcoming earnings, these are the earnings. I don't think there is, NVIDIA is not this week, right? We got Circle, Constellation. Anyone in Constellation Software, not the beer, not the liquor company, but Constellation Software. That sounds becoming like more attractive valuation. I've always respected Mark Leonard a lot, but was never able to pull the plug in buying Constellation Software because it was expensive. Now, given the Sasso collapse, it's available at cheaper valuation. We're wondering if anyone already owns this or have some thoughts around Constellation Software. No, I'll have to put it's on my watch list, so we'll see. Nothing on Monday. C Limited one that I will look into it. So next, then there's Alibaba on Wednesday, I guess. So it's gonna be a
NetBoys Wednesday.
Sorry, which one?
NetBoys, right?
Nebius.
Yeah, that's.
I'm not looking at. I'm looking at Iron. Like they announced a partnership with Nvidia, and stock was up like gazillion %.
Yeah.
No, I'm not interested in Nebius or Oklo or.
How about Cisco?
I've never owned Cisco, but it is now come back to life. Again, I'm raised a bar in terms of the individual companies to add to portfolio. I'm not looking to add too many individual companies. So, yeah, I'm mostly trying to, because the idea is that I don't want to like try to hit too hard and then, get out.
Oh, I mean this one, ONDAS. That's the
what is ONDAS?
Isn't that the drone system? The drone defense system?
It says Ondas
drones.
Networks. Is that a drone defense system?
Yeah.
$50 million revenue and $4 billion. What can go wrong? Privatless wireless drone. Yeah, it's a drone. Yeah, it's a moonshot. Yeah, sure. My moonshot, I think one of the view which shows you how much is the portfolio in your core portfolio, growth portfolio, moonshot portfolio, what's your coffee can position. So my moonshot portfolio is, well, I want to keep it like less than 5%. So this will go in a moonshot, but not for me. What else? Look at some earnings. Another 5 minutes, then we'll open up for a breakout rooms. Or you want to go and talk about breakout rooms? Discuss.
Yeah. Hey, you said the Constellation Software. Is
Yeah.
it listed on the? Is it listed on the US stock exchange?
It's a Tokyo Stock Exchange company, but it trades in OTC market.
I know, but it is listed on the Canadian only. So I already. That was my biggest position. That was my biggest position in Canadian account, and it served me very well. But it went all the way to $5,000. Now it came back to 50% down. So
yeah. So I mean, their CEO is amazing.
He's already. I know, but he left. Basically, he became chairman. So
no, because he had a medical issues. But I think now he's over. I think he got diagnosed with cancer or something. So he took a leave. Now I think he's still a chairman, but probably now his health is improving, maybe back. But I also met one of a guy from Constellation. We were just talking about Constellation. So I told him I don't own it. but it's on my watch list because now after the Sasso collapse, Constellation also got hit hard because they own like some thousands of smaller software companies.
Yes.
That's the business model is go and buy vertical software companies. Right? And now
they list those ones back into the stock market as a other listing. So I have been with the Constellation Software. They issued like two different ones, like OTC and then some European one.
Yeah, so they have so they have a Lumane and Lumane and a T something starts with T. But the little difference is I think one of them is a sector specific and one of them is geography specific. Techium or something, right? So one is like they're gonna look at these sectors across the world, and I think one of the companies we're gonna focus only on Eastern Europe or something. So so again, I'm not dug deeper into this company, but this has been on my watch list for quite some time. But right now the bar is higher for any company to get into portfolio, but looks to be interesting.
No, it served me very well in my account for almost like I've been with them for 10 years. But the only thing which is harder and harder is that it is not coming back to the old glory days. So Topicus Topicus TOI is the one which is European arm of the same thing, and then the Lumen is the other one. So I got these two stocks free of cost because I own these two.
Correct.
For so many years. Yeah, but last 1 year has been very brutal for this company for sure.
So
it went like all my like profits went all the way to the like a 5,000 to 2,000. So
it's a Sasso collapse. They all have been beaten down because we think that basically Anthropic will make all the software and we won't need any of those software companies.
Which is stupid, but
so we have to do our own due diligence in terms of whether the small business owners will be willing to just create their own software or they'll still need the assurance of someone behind it. But anyway, I mean, that's their business model. Other thing is I've never owned any serial acquirer. I don't understand in terms of how exactly the acquisition model works, how they raise capital, leverage, and all that stuff. That's another thing why I've stayed away from any serial acquirers, right? So Constellation is only its whole business is serial acquisitions. So anyway, all right. Anyone wants to get into some specific earnings, or we open up for breakout rooms? Sorry, we ran out of time to talk about crypto. So let's skip crypto. Chintan says,
Vivek.
Melly. Let me go through some earnings. Hold on your question, then we'll open up breakout room and then we can talk as much as we want. Melly. So let's talk about Melly. Damn, I still think why don't I own more of this? Okay, let's go back to main one. Who are there any other Melly shareholders? Mercado Libre?
Yeah, me.
All right, so let's talk about it. Revenue grew 49%. This is the only company out of, I think, 60,000 company listed in the world. This was like, I wanted to be on the safe side. So as a best growth of any US company listed in this category, but I think it's the best company of all the company listed in the world. This is the only company that is growing its revenue by more than 30% for 29th consecutive quarter. Right? So huge revenue growth. But revenue is not the only thing. You can always buy revenue. So that is just one parameter to look at. Gross profit was up like 40%, almost 40%. What spooked the markets? Operating income, if you look at it, was down 20% as compared to previous year. And so then it flows back to the net income and EPS. Right? So the stock got punished. It was down 5% after earnings. Then I think it got beaten up more the next day. But look at the business side. Stock is one thing, business is another one. When I look at a business side, The GMV, gross merchandise volume, is up 40%. Take rate is up to 25%. Total payment volume, because they have got a Mercado Pago, which is the fintech arm, payment volume increased 50%. Number of transactions is 40%. They also provide credit, like they provide credit to merchants. They provide credit to consumers so that they can buy it on Mercado Libre website. It's like Amazon providing the credit to you. And then over the last, I would say 18 months, they've started providing credit cards. So this is like not a consumer credit, but it's like a credit card, like you buy a credit, you basically have credit card in US, right? Latin America, a lot of people, they're either unbanked or underbanked. They don't have a cards. So Mercado Libre got into this business after doing Pallet for a long time and perfecting the risk models. It grew 87%. This is a business that has been growing in 3 digits over the last few quarters, and now it has grown from almost like 90%, not bad. Everything looks good. Only thing that would be concerning is the net interest margin after losses, because credit card business is a business which is a high volume, low margin business. And that is what has been impacting all of their margins, operating income, operating margin. Number 2 is they've been doing a lot of investments in their logistics. So which means a cost, and that means margins is low. So that's what is hurting their margins. Long term, I think this is a good thing to be in, except if this NIMAL doesn't go down too much. So we'll get into reasons of what management told about this. But because you're in a credit card business, you have to account for your losses upfront at the time of origination. So for example, let's say you give a credit card and I swipe a credit card for $1,000, right? Melai has to account that this $1,000 could be lost, right? Or whatever, some percentage. This is called loss provision. They have to provision that as per, and then that impacts its operating margins right away. Now, I may just pay my bill. So that losses may not materialize. But from an accounting perspective, they had to provision their losses at the time of origin. The provision to basically keep a provision for losses at the time of origination, which brought down their operating income. Right. Advertising revenue, which is a high margin, continues to grow at a nice pace, up 63%. And they are now basically infusing generative AI, which company does not. They are entering into a new credit card now moving into Argentina, because they've scaled in Brazil, Mexico. Now they get into Argentina, and they're also now moving into payroll loans, right? So started as a marketplace to sell the goods online, integrated the logistics business. Now third parties can also use the logistics business, brought up the payment system so that people can actually pay not only for buying the goods on Mercado Libre, but in Latin America, people pay to their electricity bill using Mercado Pago. You go and to, let's say, equivalent of Walmart, you're not on Mercado Libre, you go and equivalent of Walmart, a physical store, you're actually paying using Mercado Pago. So this is like integrated into daily lives of 600 million overall market size of Latin America. So that's why I'm still bullish about it. I will continue to watch NIMAL, net interest margin after losses. The bigger question will be, are they offering loans to more risky consumers, and that is why the losses, the net interest margin is going down? Or is it something else? Or is it because it's a new cohort which is growing faster, and when you have a new users coming in, your net interest margin is little lower, and as a cohort matures, it becomes larger, right? So you need to get into those things. We'll get into now. But overall, I think it's still, I'm still happy with it. So I actually bought the shares after it was down like 10%. So what got Wall Street concerned? First is massive upfront provisioning, because they basically provision for 100% of expected losses. So if your credit card business is growing higher, your provisioning will grow higher. So Wall Street is a little concerned about cost of risk. Second thing is asset quality, because they basically extended the average duration of a personal loan from 5 months to 8 months. So Wall Street is a little concerned. Are you basically extending credit to more riskier consumers? How does that change your profile? Third is, of course, macroeconomic is always there. It operates in Latin America company, and there is always something going on. Product mix shift from having a profitable third-party merchant or profitable merchant and consumer loans. Now we're moving into credit card loans, which is less profitable. So product mix has changed. And of course, rising logistics cost. Looking at the playbook of Amazon, we punished Amazon in 2016 because they were investing in logistics. We punished Amazon in 2019 because they say we're gonna invest more. I think while credit card in itself may not be an exciting business to enter into, because you have a competition from, let's say, Nubank. They don't have much competition from traditional banks because the traditional banks don't care about consumers. But they may have a competition from Nubank. But I will still be okay if this is a loss leader but gives rise to a flywheel, which basically will gonna boost their e-commerce business, right? And they keep money within the ecosystem. They have other products like Mercado Fondo, in which you can basically buy money market funds, etc. They have the data on the consumers for last 20 years. This is not a new company, right? It's been operating for 20 years. Don't know exactly where you buy, what you buy, how much is your credit capacity is. And so I think I want to give them a little more chance and time on the credit card business than getting like shaken out by, oh my God, your NIMAL has come down 5%. So I took just an opportunity to buy a little more at 1650. I'm not saying you should buy it. You should figure out if this fits in our portfolio or not. It's not a US based company. So it has got other risks, but I think I like it. I will still own it. Best thing I like about this is I don't know. I tweeted about it. I think I respond in someone else's tweet. I responded it was management very clearly said we are not optimizing for short-term margins. Right now, it's a time to invest because the market is growing and we can profitably, in the future, we can basically grow our profitability. So it's a time to invest and not harvest. So the company has gone back in investment mode, not depending on if you are looking for next 1 year, probably the margin is not going to improve. But I'm looking for like 10 years later, right? So for me, it's okay. I'll still hold this. I think I'm pretty excited about the company and the optionality that it has.
It is Amazon 10 years back.
But Amazon only had AWS. They don't have AWS. Now, I think recent news was, and again, I did not know this, but when I did the stock pitch, one of the fund manager, he told me, he said, now he's looking at, I mean, I'm not a fund manager, but he manages a fund. Says that he's looking now, got excited by Melli. He said, I've heard about it, but your pitch is compelling. I want to go do another study about it because looks like last week or somewhere, Netflix basically tied up with Mercado Libre because they also have a streaming, very small business. Because Netflix was finding difficult to grow in Latin America, they tied up Mercado Libre. Right? They have a lot of optionality. Right? They started with the merchant. They can move into gaming. They moved into merchant, moved into logistics. Now credit card. Then we're looking at money market fund, etc. Advertising, another one. Look, Amazon advertising business is now what, $40 billion business? We never talked about it in 2020. I think the first time I talked about Amazon as an advertising business was in 2022 or 2023. It was a small business. Now it's become a big business. So I think Mercado Libre has a lot more optionality. So I think I'm still bullish about it. And this is stock which is not known financial media don't talk much about it, so I think I'm happy with it. I can build my full position until before it starts to run up. And yeah, so that's my thesis on Melly and our earnings review on Melly. Another question. Rajiv say got stopped out of Melly this week. Now should get back in. Yeah, so right, this is where the coffee can stuff comes in. If I see, okay, I cannot do on Melly because it's still not reached my coffee can, I'll stay away from Melly. Basically selling call or call spreads, might sell call spread. It's not a good ticker to sell options on. The spreads are very wide. Amazon had tons of money flowing from AWS with supported capex, and they were a tech company as well. Yeah. So, but Melly is free cash flow positive. Even after these investments, it is free cash flow positive and not the fake free cash flow, which means doing stock-based compensation. If we exclude the stock-based compensation, they're still free cash flow positive. And I think 3.5% free cash flow yield. So even after doing these investments, so I mean, I'm still bullish about the company. What else? Or we open up for breakout rooms.
Can you talk about Comcast?
Comcast. I'd never owned Comcast.
Well, it's our monopoly on internet. So I'm wondering why I'm losing 1/3.
So what monopoly? Starlink is giving them a challenge. So let me open up the breakout rooms, and then we'll look into Comcast. Let's go to the. Let me go to. Well, I was logged into one on my website, right? I'm just seeing if I was logged into my website, I can just pull Comcast and analyze it on that framework. Which browser was it? Okay, this is it. What's the Comcast?
CSA.
CSA. I don't think I ever pulled the data for Comcast. Hold on. Yeah, this is again, I think I worked on this stuff for 2 or 3 months ago, and then I went on to Optimizer. Now I need to integrate this into the Optimizer itself. And of course, make it prettier. This is pretty bad. It is what you expect from Comcast is low, but it's a dividend paying stable company. Don't expect fireworks from Comcast, right? But what, let me just look at what concerns from me is no growth, almost no growth.
Well, if you look at my notes, they lost 65K broadband, but they got 435K in mobile, which is, I assume they earn more money, right?
Let them show it in the numbers. Last 1 year, revenue growth they've been like almost no revenue growth, like 3-year CAGR is 0.62%. This is a mature company returning capital to shareholder in terms of buying back their shares and getting a dividend yield, good dividend yield. So if you're a dividend investor, yeah, Comcast could find a place in your portfolio. Right? And there's the reason why it is trading at a cheaper valuation, because there's not much of a growth that investor can expect from Comcast. But it's like whatever money that they get, they have there's nothing more new to invest in their business.
Oh, so Vivek, I should change my order for 100 shares to 5 shares of Milly, right?
I don't know. I mean, if you're a dividend investor, it's a good dividend paying company. But if you want to look at, hey, no, I want to have a lot of capital appreciation, I want to invest in a business that is growing and, something in the future, then this may not be the company. So it depends on what kind of investor you have been or you want to be. This is a mature company. Don't expect any fireworks from Comcast. We'll pay you some dividend, and then stock will look at it. It's like a P ratio 4.94, right? Value investor would love to buy it because, hey, I can get 4% as a dividend, 7% as a buyback. You're making you're making like 10%. Be happy with it. But I am not the one who, like not for me. But there are many investors who are dividend investors because they're retired. They need almost a surety that they'll continue to get the dividends to pay their bills. For them, this is a pretty good deal, like 4%, 3% dividend. It's returning capital to shareholders. So that's around it. Let's maybe, I don't know if did they report earnings? And I'm sure if we run on a reverse DCF, probably it will also show fine.
It also is a low price earning.
Yeah, it is low price earning because we don't expect any fireworks from this company. It's like a mature company.
Agree.
So it has a place in one particular, some type of portfolio, not mine. So what's the free cash flow growth for last 4 years has been? Like 10%. So like market is not even treating it as what's market is pricing in as what? They're not going to even grow their free cash flow for, let's say, 2%. Market thinks that there's no more free cash flow growth. So it's a pretty mature. Let's look at not insider. They got some option awards recently. We got a 50 sales, 0 buys. Nobody bought it. You just get awarded options, which is fine, but nobody is actually going out and buying it from an insiders. Earnings. Did they report earnings recently? I don't know. Otherwise, we'll look at Q4 earnings. Maybe we can also look at 13F, CMCSA. Oops. CMCSA. Who else owns? Pretty soon we'll be in a 13F season, so it's going to be exciting. CMCSA. Oh, not Q1, Q4. Yeah, so 0.72, Stephen Cohen is a trader, so ignore it. No one is actually, at his last quarter, no one bought it. Right. Forget about this. Let's look at a longer trend. Oops. CMCSA. Let's go back to quarter. Let's go back 3 years, starting out 2023 all the way till 2025. Dodge and Cox. Last they bought it was in 2024. They have the max. Norges Bank. I was surprised with this Norges Bank. This like almost every ticker they buy, sell, buy, sell. I've lost respect for Nikolai Tangent now after looking at the quarterly performance. Yeah, I mean, not many recent buys. Most of them are either the hedge funds, etc., which is they'll have a short holding period, but Ritholtz, Tweedy Brown, Penza, yeah, it's not much of an interest. Since they started using analysis free or something, pay monthly for. This is my site, but I don't think I've opened it for others. Like I said, I was trying a lot of stuff, but I will include it as a part of the of the optimizer which I'm building. I want to add all these things together, and currently I think you get access to the video recordings of our weekly discussion meetings, and You could see my trades, except the hedging trades, which I do, but nothing much on the website. But that's what I want to roll everything under Optimizer and make it available. But that's what I'll be working on. Yeah, right. But this 13F, I think some portion of 13F is available. I think you can look at fund manager activity. You can look at, I don't know, but here I think maybe only 1 or 2 things are available. Others are not yet. Oh, what else? What other things do you do to manage your portfolio? I mean, I still have a lot of stuff that I do. I have yet to port it onto the application. But I'm just wondering, what else do you guys do? Okay, let me stop recording. I think we're done with today's normal discussion.